Good morning, everybody. Welcome back to another episode of the Market Open. We are back and we are live once again to analyze the global capital equity markets. I have been gone for the past couple days. I am sorry for that. I am not 100% yet, but I'm pretty damn close. Kind of like my iPhone battery, but we're back and we're ready to analyze the markets. I don't know what happened over the past couple days. I haven't been this sick since August of 2022. That's when I had COVID. And it's funny. I woke up, I slept through the market close on Friday, and I woke up, and the first thing I saw when I opened up X was that there's a new strain of virus in China. Like it's not like an official thing, but they were like in the lab. They like found out it's like a new form of COVID, and I just went back to sleep. I was like, I saw my portfolio, saw how bad Friday had ended, saw the new strain of COVID virus. I was already sick. I was like, screw it, I'm going back to sleep. So that was how Friday ended. I took Saturday to recover, took Sunday to recover. I didn't get to do the futures stream last night. Wanted to officially like just get closer to 100% so we could do the market open today. And now we're back. Now we are back. I don't think I'm sick anymore. I don't think I ever was really sick in terms of like a fever. I definitely don't think I had COVID. I think I was just exhausted, dude. I think I was just really exhausted from the California trip, and I didn't realize how much running around I was doing with zero sleep in California. And you know, from that perspective, I didn't sleep on the flight back home to the States. I don't know. I think there was a lot of exhaustion, and I kind of just took the time to relax and actually get some rest. And you know what's also funny what's also funny is on Friday it was also a cold Airbnb, dude. I think that's what also did it. That Airbnb I was at in California, great Airbnb, great host, but it was freaking cold every night, and I don't think the heater was working as well. You know, so I took some NyQuil on Friday as well after the market open, and I I realized when I was a kid, I used to have to eat sugar after I ate like or drank cough medicine because it was so disgusting. As an adult, I understand why people get addicted to lean. I mean, it was really good. The cough medicine was great. Like, I wanted to drink more of it. I was like, this is phenomenal. Not only did it make me feel good, it tasted good. So it was one of those things where I haven't drank cough medicine in like 3 years or something. And I was like, this is why the rappers make songs about cough medicine. Like, it's actually pretty damn good. But anyway, I think the cough medicine got me back to normal, had a ton of Tylenol, and we're good to go. And it's time to analyze the capital equity markets. I was leaning, dude. If I had some Sprite, I would have been leaning, dude. It was really, I was like, damn, this is not too bad. But I like it. I didn't need to chase it down with anything. I was just like, oh, well, there you go. I feel better. But look, no, I'm back. I'm ready. I'm excited. It is an honor and a privilege to do this job every single day. And this is one of those jobs where you don't really take a day off, you know? This is like when people actually care about hearing your thoughts and opinions and getting some insight on the markets. You don't take that for granted. And so I hated taking basically the last 2 days off, but we're back. Should be good. Back to normal. We have NVIDIA this week. That's going to be very important. We've got a lot of updates over the weekend, a lot of updates this morning that we're going to get into and start talking about. But NVIDIA on Wednesday, that's going to be very, very important. I'm going into the earnings with 500 shares at $125 average, basically all courtesy of the DeepSeek dip. And if we don't get a good earnings, then the DeepSeek dip, well, there you go. This is your classic admit, baby. We're back. The DeepSeek dip might end up not being as exciting as it was, because it might get even lower. But outside of the DeepSeek dip, I think that Jensen's going to have to put up a really good quarter. And we're going to listen to Dan Ives, some of the thoughts he has on NVIDIA, what has to happen, where it has to go. I'm about to get flamed in the comments for that. I don't even want to read the comments for that. I'm getting back to normal, dude. What one thing that doesn't change after you get sick is the mispronunciations. That is not going to change anytime soon. But I think NVIDIA's got to put up some monster numbers, and if they don't put up some monster numbers, we're not going to have the best market, given the market is kind of hinging on NVIDIA, which is going to get us into what's going on in the macro. I kind of compiled all the reasons why I think the market sold off on Friday. We're getting a little bit of a rebound right now in the pre-markets, and so we're going to kind of see how that plays out going into 9:30. So we're going to be talking about that. Obviously, we're going to be analyzing NVIDIA in depth and seeing what numbers we can get from them on Wednesday. I'll be live with Jose on Wednesday to discuss NVIDIA. Big headlines this morning. Palantir is down 4%. We'll talk about why Palantir is down 4%, but we're at 97.11. At one point, we were below 97. So we'll get deeper into what's going on with Palantir. It's definitely taking a little bit of a beating. Alibaba is down 4% in the pre-markets. Tesla was down 3%. Now it's up 1.6%. I don't know if any news came out on Tesla in the past 20 minutes, but Tesla just did a little bit of a reversal. And then Apple. real big news on Apple. They are down right now in the pre-markets, about 0.49%, but Apple is investing a lot of money into the United States. And the reason they're investing a lot of money into the United States is probably to avoid a lot of tariffs from Trump. And we'll be getting into why that matters and kind of how that's going to implicate the broader AI data spend or data center spend narrative. But that is kind of the main headline this morning that we're going to get into as we get into the market open. Two other quick headlines. We'll talk more about them in a second. Robinhood is not being investigated anymore by the SEC. That's why Robinhood is up 3% in the pre-markets. They literally 5 minutes before I went live closed the investigation. So the SEC, I don't even know why they were suing them. They were probably suing them just because Gary Gensler was bored a couple of years ago. That investigation is closed. So no more investigation into Robinhood crypto. They're good to go. And looks like, at least from that perspective, Robinhood's not going to have to deal with any pain from the SEC. This is Trump's SEC now, so it should be a lot more friendly to Robinhood. And then on top of that, the other headline that we got this morning was Michael Saylor, who raised $2 billion at a 0% convertible note on Thursday. And on Friday, he spent $1.99 billion, so about 99% of that $2 billion, by buying 20,356 Bitcoin and $97,514 a coin. So you got Hood that's not being investigated by the SEC anymore. And that's why they're up 3%, even though Hood did take a nasty beating on Friday. We'll talk more about that in a bit. And then Michael Saylor, who raised some money and spent that money as soon as he raised it. MicroStrategy now has 499,000 Bitcoin at 66,000 per Bitcoin average. And they are continuing to hodl as MicroStrategy continues to do what they need to do. All right, cool. Time to get into the market open. Good morning, good morning, good morning. Thank you, everybody, for being here. All right, let's start off with Tesla because everyone's spamming Tesla in the chat. Tesla FSD China. Okay, so that seems to be the headline. Let me pull this up real quick. I guess, yeah, there you go. That is correct. So Tesla to roll out software update to Chinese EV owners in batches. Tesla prepares to deploy long-awaited FSD features in China. Tesla plans software updates with assisted driving for city roads. All right, so that is why Tesla did a bit of a U-turn this morning. Tesla was at almost 320 or 329. Now it's at 343, and it looks like FSD is coming to China. Now, while we're on the topic of Tesla, we might as well get into it, and then we'll get into what's going on with Apple. So over the weekend, Elon obviously has been Elon. He's been continuing to be very politically motivated and speaking on the certain types of politics that he wants to talk about. That's just who he is. At this point, if you're a Tesla shareholder, you kind of have to deal with the fact that that's who Elon is and he's not going to change. And unfortunately, there are a decent chunk of people in the world that are associating Elon with becoming a Nazi. And as a result, if you're a Tesla shareholder, this is some of the stuff you have to deal with. Here's someone who posted a Nazi graffiti logo on a Tesla supercharger. And there's another one, if I can find it, where someone painted a Nazi logo on a Cybertruck. So this is some of the, the bad stuff that's been happening as a result of Elon becoming more political. Obviously, you got a lot of people that disagree with his politics, disagree with the parties that he's supporting in Germany, and we're seeing some of this stuff happen. And as a result, Tesla shareholders kind of have to deal with the fact that this is not going to be the easiest ride as Elon continues to engage in politics, because the Tesla brand, one could argue, is getting hit because of his association, or people's association, with Elon and Nazis. Now, having said that, that is an association that some people have, and some people are going to take actions on that. I don't think that is the inevitable reason why Tesla falls. I think Tesla falls either because they can't get robotaxis or FSD to scale in the next 18 months. And given that Austin is going to be the launch for FSD unsupervised in June, we're going to see if Tesla really has the ability to start navigating and competing in a meaningful way. Tesla up 1.74% in spite of all of the stuff we saw over the weekend, to me, just basically signals that the market doesn't care. If they can get FSD out in a meaningful way, the market's going to give them the premium that they deserve. And the market's also going to be very excited about Tesla's ability to eventually scale FSD across the world. Again, Elon famously said 2 quarters ago, the difference between Tesla being worth zero and trillions is FSD. So they've got to figure that out. Speaking of FSD, I found the clip over the weekend of Dara, Uber CEO, being confronted about robo-taxis and working with Tesla. Here's exactly what he said. It looks like Tesla is officially going for it by themselves.
I mentioned sort of flippantly, a potential deal with Elon Musk and Robotaxi. Robotaxi, we're told, will launch in theory this year. It does make sense that somebody like you and Elon Musk would co-join and unite behind this AV
We
venture?
certainly think it makes a ton of economic sense in that what we bring is demand to the AV ecosystem, when demand often is quite variable. So we're able to have call a base load of AV demand. These cars are driving 20, 22 hours a day, and then we're able to complement that with human drivers as well. We would love to have Tesla's content on the network. There are about 150,000 drivers now who drive Teslas. 2 weeks ago, I got into Tesla Uber, and he was using FSD. The driver was using FSD. I asked him, when do you use it? When do you not use it? He's like, it's great. It kind of takes the edge off. Some of his passengers don't like it. Some do. So for us to turn those Teslas into autonomous Teslas when it's superhuman safe would be terrific.
Have you had a serious conversation with him? Do you interact with him? Is it one of the parts of the conversation?
I've had conversations with them. At this point, they want to build it alone. So to some extent, in Austin, we in Waymo will be competing with Tesla when they launch. And let's see. Life is long, but we would love to partner with them.
So that's the official announcement by Dara. I mean, I was quite surprised to hear that. I think some of you guys caught this headline on Friday, but I found the video of it on Saturday. But Dara said, hey, we talked with Tesla. We said that we want to compete. And as a result of those discussions, no partnership actually happened. It was Elon basically telling us to, essentially F off, and we're going to compete with you. And we're not going to be partnering with you in any meaningful way. Now, the Uber bulls, their kind of core argument has always been, Uber, by the way, down about 1.39% right here. Their argument has been very simple. Their argument has been, hey, there's 170 million users. There's network effects on Uber. FSD, in order for it to scale, needs the users. Uber has the users. We can bring the fleet towards Tesla, or Tesla can bring the fleet towards us, vice versa. There's sort of a symbiotic relationship. And then we can split the profits, or Tesla can get 80, we can get 20, whatever it is, we can collaborate in a meaningful way. Basically, Dara just confirmed that those arguments by Uber bulls are not correct, or I shouldn't say arguments. Those were assumptions by Uber bulls on how the collaboration between Tesla and Uber would play out. That's not happening. That's not happening. And I mean, that's not coming from a journalist or reporter. That's coming from the CEO himself saying that Tesla told us they want to do it themselves. Now, what has the Tesla bulls argument been? Tesla right here up 2.5%. It's been pretty simple. It's been, hey, Uber is an app. We can build an app. We can get 2 engineers to build an app in a day. And when it comes to getting users, well, if we have the cheapest price for the drive to the airport, and it's cheaper than Lyft and Uber because of the fact that you don't have to pay a driver, then boom, like people are going to pick self-driving cars as long as they feel okay with being in a self-driving car, which I think is a fair argument. I do think it's a fair point. I don't think that means Uber goes bankrupt, but I do think that means Uber has headwinds from a narrative perspective on the perception of its business. So that, along with FSD getting launched in China, is why you're seeing a bit of a reversal right here on Tesla up 2.5%. This is why I think it's hard to short Tesla here as well. I've seen a lot of talk on Twitter over the weekend about people saying it's time to short this thing. I mean, you could. The problem is any news headline around FSD or robotic scaling is just tough. It's tough to imagine easily being short this name, given sort of the technological landscape that we're in right now. So Uber right here down about 1.5%, Tesla right here up 2.5%. One other quick thing on Elon over the weekend. We talked about his foray into politics. Elon did tweet this over the weekend, which is another reason why Tesla shareholders are trying to reconcile him being part of the government now. Elon said, consistent with President Trump's instructions, all federal employees will shortly receive an email requesting to understand what they got done last week. Failure to respond will be taken as a resignation. So for those that don't remember, when Elon bought Twitter, he famously messaged Parag Agrawal, who was the current CEO of Twitter at the time, what did you get done this week? And it kind of went viral as a meme because a lot of people were convinced that, Twitter CEOs, Twitter C-suites executives, Twitter employees did nothing because the platform was really bad, in my opinion, before Elon bought it. Obviously, it's not perfect, but in terms of just innovation, like you didn't even have an edit button on Twitter, right? It was like 15 years. You didn't even have a simple button to edit your tweets. So from that perspective, Elon kind of went viral with asking that question. And literally over the weekend, if you work in the federal government, about 2.7 million employees, they got an email saying, what did you get done last week? And they had to respond to their manager what they got done. And if you don't respond, you're technically getting fired. So I think from that perspective, we are going to see a lot more disruption when it comes to the federal government, when it comes to employees that work for the federal government, and when it comes to people that just might not want to answer these questions. Now, my take on this is very simple. Like, I think you're supposed to be able to answer that question. If you work at a tech company, if you work at if you work at a pizza restaurant, like you're supposed to be able to tell your boss what you got done, right? So I don't think it's a big deal asking that question. I think it's just adding a little bit of transparency and auditing some parts of the government that probably weren't doing as much. But nonetheless, he's going full on with this. And the reason I'm bringing it up is because it is bringing a lot of resentment and hate towards Elon. And that might affect Tesla. That might not affect Tesla as much as FSD launching in Austin. It's going to be one of those things that we have to figure out. My perspective on Tesla, again, has been pretty simple after I saw the Figure headquarters in California, which is, I think robots are coming. And I think you got to get excited for Tesla regardless of the valuation, because eventually this thing will become much bigger than it is today. But in the short term, that can definitely create some of the volatility that we're seeing right now here on Tesla. So that's what we got on Tesla currently in the morning. Big news for why it's up 2.5% is because of FSD happening in China. Let's talk about Palantir. And then we'll get into what's going on with Apple. So Palantir right here is down about 4.5%, or is it no, 3%, about 3.7%. Here's my take on why Palantir is down. There was a Bloomberg article this morning kind of highlighting the lack of government spending in the Pentagon, and that's why Palantir is down again. This was the headline for why Palantir was down back on Wednesday when it fell from 125 basically to 115, and then it ended up falling to 95.80. That's the key level that we have to look at this morning at 9:30. 95.8. Do we fall below that? If we do, we're probably going much lower. If we stay above that, Jason's key technical level is 110, so realistically we got to get above that, but we'll see how that plays out. That Pentagon headline is still making headlines 5 days later, even though Pete Hegseth kind of came out and said that's not exactly what we're doing. We're not really getting some of this funding. We're just kind of rearranging how the funding is happening. I don't really think it's about the funding. I think it's more about the insider sales. And I don't think the insider sales are that meaningful as a reason for Palantir to be selling off. But nonetheless, Karp, Sham, and Stephen Cohen, who are the Stephen Cohen is the co-founder of Palantir. Sham is the CTO. They all sold close to, like, I think when you put it together, a couple million shares of Palantir on Friday. So the insider selling that was announced via the 10K and then went viral, with the headline, Alex Karp sold $1.2 billion of stock. That sell-off started happening. I think Sham sold 500,000 shares. Karp sold 600,000 shares. Steph Cohen sold like 700,000 shares. So they all sold a ton of shares on Friday. Now, my perspective on that is very simple. Like, they deserve to sell shares. Palantir is up 10x from the lows. I mean, like, they've been there for 20 years. Like, yes, they deserve to sell their stock. The question for us as investors is, do you sell in accordance with the insiders? And again, my answer is very simple. It's been like this for the past couple of years. It's like, if you want to downsize your position and sell with the insiders, then sell with the, if you have 10,000 shares and you want to sell 10% of your position because Karp is selling 10%, I'm just making that up, but let's say Karp is selling 10%, then you do the same. You sell 1,000 shares. If you don't, because you don't have 50 million shares like Karp and you kind of believe in the long-term vision of this and you have a relatively strong average, then you kind of just hold on. I don't think it's that complicated. In reality, the actual reason I think Palantir is down 4%, it's not even about the insider selling, or it's about the Bloomberg Pentagon headline. It was extended. There's multiple gaps that need to be filled. The stock was at $125. It was up 65% year to date. I mean, it's taking a breather. It's taking a very simple breather. This is like, the sad thing about this, and I realized this when Palantir was going up, but like, you can't do anything about it. As Beneficial says right here, valuation compression. Palantir really didn't deserve to gap up all the way to 125 and be worth almost $300 billion. Like, from a fundamental perspective in terms of its growth, all of us knew that it didn't deserve that. Now, did we enjoy the process of it going? Of course, because like, why would you not enjoy while the stock's going up, right? You're like, just having a good time. But at the same time, I think every single day we all knew, all right, this is getting kind of ridiculous, but we'll take it, right? Whoever's buying it is whoever buying it. And in my opinion, it was not retail. I don't think retail moved it up $80 billion post earnings. I really do think that was institutional money. And if they want to start buying it at these premiums, go ahead, because we got to buy this thing at $6. But the downside to it getting that extended is that we know it's unsustainable. And because it's unsustainable, it tends to come down. Now, the bears will look at it and look at 125 to 90 and be like, oh my God, look at Palantir, such a dramatic decline. When in reality, it's like, yeah, but it was probably never supposed to get there. And also, currently at 97, it's still way higher than it was at the beginning of the year when it was at 60. And it's way higher than it was at $16 in January 2024. Stock's been completely re-rated. So it's one of those things where you zoom out, and a lot of the bears will talk a lot of shit, and you kind of just got to let them talk shit because A, they missed the story, B, they're never going to be part of the story, C, they despise Palantir. Like, the level of hatred I saw over the weekend of people that just hate the company. They hate me, who's like a vocal opinion on the company. They hate everyone who has some level of influence in the Palantir community, who tweets about Palantir. Like they hate us, bro. Like this weekend, I got a reality check of there are people that just do not like any person associated with Palantir and any person who has any commentary or opinion on Palantir, because they don't believe in the company. B, they don't believe the company should be valued at this level, which is fair. You're allowed to believe that, but there's a level of like vitriol that some of these people have. So from that perspective, I think you kind of just got to deal with it. And look, I hope Palantir doesn't collapse 30-40% from here, but if it does, I'm not going to be one to be like, oh my God, it's the worst thing in the world. In fact, as someone who would love to have more shares, I would be excited for that opportunity. But I also think it's one of those things where everyone has to come to a realization that, yeah, the valuation's up there. Even at $97, it's a lot. And I think for good reason, there's a way to justify it being at these levels just from a qualitative perspective, Doge, OpenAI's valuation, all that. You can point to a billion things, but it could also retrace. And we've seen every stock in the history of the stock market, Amazon, Google, Meta fell back to $88 at one point. Like these stocks take a breather. And I think that might be happening with Palantir right now. My gut feeling is that Palantir doesn't do a reversal when the market opens. I hope it does, but this is not pretty pre-market action. This is pretty nasty pre-market action, especially when a lot of names are actually reversing and going green. So Palantir uniquely is being singled out. People are taking profits right here. Retail is probably getting kind of scared. Maybe wants to solidify their profits, but you can't blame them. But that's kind of what I think is happening right now when it comes to Palantir. Dwayne says, mate, where do you think Palantir will be in the 3 months? Got some leaps expiring in September 2025, up quite a bit, but considering to close short-term, keep longer date leaps open. Yeah, look, my thesis on Palantir and investing in general is I don't do short-term calls. So this was the same issue with Grab, right? People had opened short-term calls like for $6 next month. And I'm like, dude, my price target is $10 in 2 years. I'm giving it a lot of time. But same thing with Rob. When I brought the Robinhood leaps, it was $20 by 2026. We're at $50 right now. So like you really give time for the thesis to play out. I think in general, short-term leaps on a stock that has run this much, unless you're deep in the money, or if you're deep in the money, I would personally close, because it's so unpredictable. You just have no idea where it goes. But if you have a leap for Palantir to be 130 by like, I don't know, June 2025, could it happen? Sure. But could it also like not happen? Yeah. And it's just like, we got to be honest with ourselves in terms of the price action, the valuation, and the overarching metrics. Now, granted, I think anything could change overnight, right? Like they announce a Doge deal, that changes the narrative overnight. They announce a brand new contract with the Navy, that $1 billion contract that we know we're supposed to be getting, but it hasn't been announced yet. That could change things overnight. Like anything can change because it's such a fragile stock in regards to how the institutions are wanting to desperately accumulate it. But you've also got a lot of people selling into that strength. And as a result, the bulls and bears are going to have to go at it, and we'll get to an inevitable price. I think look, my actual bottom on this thing is around 60. I don't think it drops below 60. And I mean, so far Palantir is not, and the last thing I'll say on this, then we'll move on to Apple. So far, Palantir has not played out like Tesla in 2021. Knock on wood, right? So Tesla in 2021 reached an all-time high. And then by March of 2022, it collapsed about 70%, or it was like 55%. And then it went on to collapse like 80%. Or like 70%, something like that. It went from 400 to 100 basically. And it went from 400 to 265 within 5 months. Palantir went from 85 in October of 2024 to 125. Theoretically, it should have been down closer to like 40 or at least 50 if it were to follow the exact Tesla trajectory from October 2021 to March of 2022. So, I mean, we'll see. We got another month left in that 5-month trajectory to see if it kind of lines up with Tesla. And if we actually do get down to the 50s by March of 2025, I don't think that's going to be the case. I think there's too much momentum, too much hype, too much excitement around the name, too much institutional ownership that still wants exposure to the stock. Loop Capital came out with a $140 price target the other day. They beat Dan Ives in terms of his price target. So I think you've got a lot of people that will be nibbling at these dips. But that doesn't mean it has to stay in the 90s or the hundreds. It's just a question of where people believe the stock should go down or not. And you got some people in the chat. Someone says, sorry, Mitt, but Palantir is going down hard. You got other people saying, I'm buying the dip because we think that Palantir is going to reverse back to 100. I think this is the most polarized people have been on Palantir in a very long time, especially because of the run it had getting into the first 6 weeks of the year. And I guess the market's going to kind of let us know how this ends up playing out. 96.72 right now on Palantir, down about 4.45%. Let's talk about Apple, because that's a big update. So basically, Tim Cook kissed the ring, and he kissed the ring with $500 billion. So Apple today announces in the morning, I actually woke up like 5 minutes right before they announced this at about 5:30. that Apple will spend more than $500 billion in the U.S. over the next 4 years, teams and facilities to expand in Michigan, Texas, California, Arizona, and Nevada. Plans include a new factory in Texas, doubling the U.S. Advanced Manufacturing Fund, a manufacturing academy, and accelerating investments in AI and silicon engineering. Now, Trump and Tim Cook met on Thursday, and Trump said, hey, we had a good meeting, and he thinks that Apple will be able to ignore or Apple will be able to be sort of like subsided by the tariffs because they're going to be investing more in the United States. And lo and behold, Apple comes out not even a week later and says, yeah, we're putting $500 billion into the country. Tim Cook said, we are bullish on the future of American innovation, and we're proud to build on a long-standing U.S. investment with this $500 billion commitment to the country's future. From doubling our advanced manufacturing fund to building advanced technology in Texas, we're thrilled to expand our support for American manufacturing, and we'll keep working with people and companies across this country to help write an extraordinary new chapter in the history of American innovation. Now, look, to me, this is kind of BS. The reason this is BS is because the only reason he's doing this, I mean, like Apple would not be spending $500 billion over 4 years, over $100 billion a year in U.S. manufacturing unless Trump threatened tariffs on the billions of products they create every single year coming from China. I mean, this $500 billion is probably still cheaper than Apple paying the 15 or 20% tariff on the hundreds of thousands of millions of items that they import from China all across the world, because their labor costs in China are so incredibly cheap. So am I happy he's investing in the United States? Yeah. But is he doing it simply because Trump threatened tariffs? Yeah. And I guess to credit to Trump, I mean, Biden didn't really have the excitement or the energy to be able to make this type of a deal, even through basically saying, hey, if you don't do this, we're going to do this. And so you got to give it up to Trump to at least get this deal to happen on the table because of the threats he put out when it comes to tariffs. But now Apple is not going to have to pay the tariffs, which is something that they're happy about. And Americans are going to get $500 billion invested into the United States. Now, the reason Apple's down right now in this news is because $500 billion could go to buybacks. And it's not going to buybacks. It's going to U.S. manufacturing. Here's my take. I think $500 billion in buybacks for Apple shareholders would be better than $500 billion invested in U.S. manufacturing. Not because $500 billion invested in U.S. manufacturing is a bad thing or it's like bad to create jobs or anything. But I don't think they're going to get that big of an ROI investing in manufacturing in the United States. Like, I don't think they're going to have such unique talent and labor costs and innovation in the United States versus just buying back their stock. So stock's down right now, basically on the news that I think, shareholders are not the happiest that they're doing this, but shareholders also are recognizing that if they didn't do this, it would be tariffs. And to me, it's a $500 billion trade disguised as an investment that is basically playing out right now. So look, it happened, and it's not a bad thing for it to happen, but that is how this is playing out right now. In terms of the Mac 7, and then we'll get into macro in a little bit. Google right here is up about 2%, rebounding a little bit off Friday. Microsoft, which we have some news updates in terms of them canceling some of their data center leases. We'll talk about that. That story has been kind of manipulated. It's not exactly correct. It's also not exactly wrong. So we'll talk about that. But Microsoft right here, up 0.41%. Tesla getting a boom off that FSD news in China. That's up about 1.8%. NVIDIA, which took a little bit of a hit on Friday, down 4%. That's up 1.69% in the pre-markets. And Meta is up 0.8%. That's at 684, down from 740. Same thing like Meta is like with Palantir. Did Meta deserve to go to 740? You could say yes, but like this quick, probably not. Same thing with Palantir. You could say it deserved to go to 125, but it was also really quick and it was going to take a breather. Meta from 740 to 680 looks nasty, but it's kind of just normal. Like it's not a bad thing for Meta to go back to 680 when it's up from 600 just to start off the beginning of the year, or like up from like 580. So from that perspective, it's kind of normal to see this play out, but the chart does look nasty, and you got a lot of people that potentially bought the short-term top on Meta at that 740 level that got very excited, but ultimately Meta was just not going to be able to sustain those valuations as well. Robinhood in the pre-markets is at 52.32. That's up 1.4%. It was down 8% on Friday. And then Palantir 97, down about 4.3% currently in the pre-markets. Amit, what are Steve's thoughts on Apple? I actually called Steve in the morning, and he likes it, but he kind of agreed that it's not anything special. It's the same exact thing that it's what they were going to do because of the tariffs. Meaning, if Trump didn't threaten tariffs, Apple would not be investing $500 billion for the health of the United States to create all these jobs. Like, Tim Cook's not that altruistic. But he had to do what he had to do to be able to not get into a fight essentially with the government on tariffs. And so that's what he ended up doing. Let's talk about Buffett. So Buffett's official shareholder letter came out. By the way, SMCI did not release the 10K yet, for everyone asking. It is not out yet. They're cutting it pretty damn close. It's due tomorrow. SMCI is down 3% right now. They were down 5% on Friday. I hope they release it tomorrow. I would imagine they do. If they don't, there's going to be some issues. But yeah, there's no release yet. Maybe they release it during market open, but hopefully they do release it soon. Okay, Buffett. So what are the takeaways from Buffett's shareholder letter? I think it was really interesting what he said and what he didn't say. So first of all, Buffett is now sitting on $334 billion of cash. It's a lot of cash. He owns he owns a lot more treasuries than the United States of America, than the Federal Reserve. So I think he owns like about $89 billion more T-bills than the Federal Reserve does, which is pretty incredible. So $334 billion of cash. That's up from $325 billion as of Q3. He paid $26.8 billion to the IRS in taxes in 2024. That's roughly 5% of what all of corporate America paid. Now, on their large cash position, Buffett said, despite what some commentators currently view as an extraordinarily large cash position at Berkshire, the great majority of your money remains in equities. That preference won't change. While our ownership in marketable equities moved downward last year from $354 billion to $272 billion, the value of our non-quoted controlled equities increased somewhat and remains far greater than the value of our marketable portfolio. I think this sentence is kind of BS. And I love Buffett, but I think he's BSing right here. So basically he's saying, hey, I know you guys think we have a lot of cash, but actually we're still invested, $250 billion in equities, and we own Geico, we own all these operating businesses, Dairy Queen, yada, yada. We have a ton of cash in those businesses. The problem is that still doesn't answer the $334 billion of cash that's invested in T-bills, right? Like basically he's trying to say, look, we own private businesses, public businesses, and although our ownership is less, we still have a ton in those businesses. But that doesn't answer the extraordinary cash position that Berkshire has, which is $334 billion. Like, why do you have that much in cash? Why is that not being reinvested into Geico? Why is that not being reinvested into Apple or Visa or American Express or Kraft Heinz, et cetera? There's no answer to that in this shareholder letter. And so if you read between the lines, I think the answer is he's waiting for something to happen to get a better opportunity. That's kind of my interpretation of it. This is what he said about the 2024 performance, even with 50% of his company showing a decline in earnings. In 2024, Berkshire did better than I expected, though 53% of our 189 operating businesses reported a decline in earnings. We were aided by a predictable large gain in investment income as treasury bill yields improved, and we substantially increased our holdings of these highly liquid short-term securities. Basically saying, like, yeah, even though our businesses did worse on an earnings metric, we still did well as a stock. Berkshire Hathaway stock is up a little bit more than the S&P last year because, like, we made a lot of money from T-bills. And so because we made a lot of money from T-bills, that's what's helping the company do well. And then finally, on the concept of a dividend, he said, note one crucial factor allowing this record-shattering payment. Berkshire shareholders during the same 1965 to 2024 period received only one cash dividend. I actually didn't know this. On January 3rd, 1967, we dispersed our sole payment of 10 cents per capital A share. I can't remember why I suggested this action to Berkshire board of directors. Now it seems like a bad dream. Basically saying, hey, you're not getting a dividend. Don't ask us for a dividend. We're not going to give a dividend. We're going to rather invest our money into equities. The problem is Berkshire shareholders are like, wait a second, you're not giving us a dividend and you're just investing into T-bills. You're not actually investing into equities. So what are you saying here? Like, I read the whole letter front to back, and there was never a moment where he said, we're afraid of the US economy. We're afraid of valuations. We're afraid of extended multiples. Berkshire did sell all of their S&P a couple of weeks ago. Granted, it was a small part of their overall equity position, but still, they didn't mention any weakness or fear that they feel for the broader economy. But Berkshire shareholders are wondering why A, they're not addressing that, or B, they're not giving a dividend if they think that their capital is better used in T-bills versus going back to shareholders. Here's another thing about the shareholder letter that I thought was very interesting. Berkshire didn't buy back any of their stock. And on that question, they quite literally said, yeah, we don't think our stock is appropriately priced to buy it back right now. Which to me means we think our stock is expensive, right? It's like when Elon tweeted, I think Tesla price is too high right now. Like, that's basically like, if you don't buy back your stock, you're obviously thinking you can get a better deal. And if you want a better deal, that means you're assuming some market volatility will take your stock down. If you're assuming that market volatility is going to happen within the next year, then that is kind of a sign to the general public that Berkshire is not the most bullish on the broader American economy. So look, do we need to get some epic collapse because Berkshire is holding on to cash? Of course not. In fact, over the past couple of years, Berkshire has had a ton of cash, and tech stocks, Mag 7, have done very well. It's just we're 2 years removed from a very strong bull market, 2023, 2024. I still think 2025 is a bull market. I don't know if it's going to replicate the same results as we got in 2024. But even Buffett's saying he doesn't have any good deals, which is kind of funny because I think Google is like a really great deal. And I think Buffett could buy a crap ton of Google and do very well, even at these multiples. But it seems like he's thinking the opposite. Granted, he would never invest in Google. But still, I think there's deals out there. Buffett obviously disagrees right now. And that's why he's holding on to this cash. Arnie says, indeed, could be preparing for a massive backdrop if Buffett dies and the stock drops. I mean, yeah, Buffett, the one sad part about the letter as well is that Buffett was kind of acknowledging his mortality and saying that there will be a new CEO of Berkshire very soon. And, it's just one of those things. As you get older, you acknowledge that you're not going to be around forever. And maybe that could be the argument as well. I mean, people have been pointing to the fact that he wants to have enough cash ready for the next person in charge to be able to have runway to manage that cash. And maybe that's why they're not spending that much. But regardless, Berkshire is holding on to a lot of treasuries, and the United States government is paying him a lot of interest on those treasuries, as he has basically $1/3 of $1 trillion stuck in T-bills currently right now. So that's the update we got on Berkshire. And yeah, I mean, look, if anything were to happen to Buffett and Berkshire were to drop, yeah, that could create a buyback scenario as well, where if something happens to him and Berkshire takes a hit, that's when they could buy back their stock. But I think in general, they're also just feeling that at $483, 23 times PE, they don't feel they're undervalued enough. And they're right. I mean, Berkshire is not undervalued. It's definitely not, I don't think it's the most overvalued asset in the world, but I don't think it's undervalued. And so it makes sense that they'd rather hold on to their cash and deploy in different opportunities as well. Domino's did have earnings today. Domino's is down 5%. Let me pull up those numbers real quick. Domino's is one of those kind of recession stocks that people look at. Hopefully, even if we have a recession, people still are able to buy pizza. Domino's right here, $4.89 versus $4.91 on EPS. That's a slight miss of 2 cents. And revenue, $1.4 billion versus $1.47. Very slight miss. I don't know if that warrants being down 5% right here, but that is the major earnings we have this morning. And Domino's is down right here. Okay, cool. Let's talk about macro. So I want to crowdsource from you guys, like I did on Twitter on Saturday or Sunday when I asked this question. And the question was, why do you think we had that sell-off on Friday? Because I slept through it, to be honest, and I had to wake up and kind of figure out what was happening. But it definitely was nasty, and this was what it looked like on Friday. My tweet here, I woke up out of a deep slumber, and this was the caption I came up with, and then I went back to sleep. I said being left on red would feel better than this type of red. This is like after a good 7 hours of sleep. That's the best caption I could come up with, but that's what I had. So it was red. It was definitely red. Ironically, Apple and Grab were the only stocks that were green on Friday. Like I was shocked. I was like, Grab's going to be green on this day. Grab right here up a little bit in the pre-market at 491. But Apple and Grab ended up being green. Everything else took a nasty little bit of a hit. And so here's what I thought were the reasons for why we had that sell-off. Number one, the PMI sucked. PMI showing a bit more of a contraction. Number two, Michigan consumer sentiment sucked. It wasn't that good when it comes to the consumer. And we're going to hear a little bit about the consumer in a second by RBC. Number three, and this is like the biggest reason why I think the market took a breather, is that we were up a ton going into last week. Made sense that the market chilled off a little bit. And then number four, Walmart earnings created some fears around the consumer. So I hesitate to even be upset about the sell-off, given the S&P 500 is barely off its highs. Some stocks that were up 50% are now up 30%, like Robinhood and Palantir, clear examples. But that's not troubling to me. And if that's troubling to you, I think we need a reality check, right? Like it's okay for a stock to go up 50%. And first of all, if it goes up 50%, you got to be ready for it to come down 20%. And if it comes down 40%, you also have to be ready for that. Like it is what it is. But that's not really that troubling to me. Now, here are the arguments I think this might end up being a buy the dip, even though we saw some weakness on Friday. Number one, the 10 years coming down. Number two, a hot CPI, PPI, aka hot inflation, hasn't been enough to take the markets down. Number three, earnings have been really good across Q4. Number four, NVIDIA should crush on Wednesday. If NVIDIA doesn't crush, we're going to have some issues. I hope NVIDIA does crush. Number five, there's $7 trillion on the sidelines. $15 billion have left money market funds over the past couple of weeks. Number six, any weakness should hurt inflation, which is good. Any weakness should bring the dollar down, which is also really good. The labor market is stable unless we see signs of real unemployment. I can't see the labor market being meaningfully weaker, which means like that's a good thing because people have money to then buy products and services. And number nine is Bitcoin. Like the fact that Bitcoin's actually staying above 90,000 to me is like a core risk on asset, and people are still finding value in it and they're not selling it off yet. So, I mean, these are just 9 ideas I came up with off the top of my head. I'm sure there's more, and there's probably 9 reasons to go against all these reasons. But this is why I still think, and Tom Lee did say this on Friday as well, that it's probably more of a buy the dip than not, given this is more seasonal weakness that we're seeing towards the end of February, which is what's happening right now. And it's likely not something that turns into something a bit more aggressive in terms of a sell-off. And it could, it's just I'm not seeing the macro reason for why that would be the case. And when I see the macro reason, then I'll say that's correct. But as of now, hot inflation hasn't even been enough to take the markets down. Nonetheless, one of the macro reasons might be the consumer. Here's RBC on the state of the consumer. We got the market open in about 3 minutes. Let's get their perspective. And then we'll keep going from there as we get into this Monday market open.
Right, with concerning data points over a couple of months now. As you mentioned, we had, the retail earnings that spooked people, and rightfully so. When you have a big bellwether come out and the guidance isn't what people want, you have to listen. And on top of that, we also had the retail sales miss 2 weeks ago. So we've seen reasons to be concerned about the consumer coming from a lot of different angles. And it's interesting, Joe, I mean, you mentioned earnings and how we're getting all these retail earnings this week. I've been scouring what has come out so far from the consumer companies, and the conversation for a year ahead outlook season is really light and really cursory. So we're seeing, we've got all these, bad data points, right, coming out, and the companies are just kind of briefly and very quickly alluding to these old themes that they've been talking about for the past year, but they're not really digging into, kind of how the quarter's gone month to month and how the year got started. We normally see that kind of stuff. So the silence I find really curious, and I want to see if we're going to continue to get that this week or if we're going to get some real meat.
I know you don't really talk individual issues, but what do you think happened with Walmart? And are people worried about margins because of tariffs, or?
I think it's the outlook, right? And I think that's a thing that we've seen throughout this reporting season is that the 4Q numbers have come in pretty good, right? Like the beat rates are up versus last reporting season. And we're not getting a lot of downward guidance in this reporting season, but we're not getting a lot of upward guidance either.
But is that crazy? I mean, there's a lot of unknowns, particularly for a retailer, if you're dealing with potential tariffs, potential taxes that could come through. Questions about the consumer. You'd be crazy to get out there and say, hey, everything's great. Is it really as bad as the stock sell-off would imply?
You know what's interesting, Becky? If you look back last year at this time, we got a big upward wave of downward guidance. And so companies really went out and kind of lowered the bar. And we're getting that for some companies, but we're not getting that generally. And that ended up being a good thing last year, right? Because they lowered the bar, companies were able to meet those numbers, and we had very stable earnings growth estimates for the year.
I only say that because the former U.S. CEO for Walmart, Bill Simon, said he thought that people were maybe misreading this, that the outlook was, or at least what the company's doing right now is a lot better than what.
I'm going to be going through the Walmart earnings. I haven't really had a chance to go through it yet. The initial take is obviously bearish, but there might be more than meets the eye to what's going on with Walmart. But as of now, the market's, not interpreting that as necessarily bullish for the consumer. We got 20 seconds until the market opens. Palantir is down 5.5%. It has broken the intraday low that occurred at 10:02 a.m. 3 days ago at 95.80. We just got to 95.75. So let's see if we're in for a reversal or if we're in for more blood. Here we go. Market open 9:30 a.m. Monday, February 24th. Thank you, everybody, for being here. This stock market is now open. All right, wake your ass up. Let's get into it. Another day, another stock market that is open. 95.81 on Palantir. A little bit of a reversal to 96.15, down 5.26%. definitely got some people taking advantage of that quick bottom, but you also have people obviously selling into some of this weakness right here, barely holding on to 96. I mean, it's trying. It's that green candle right there is really trying to hold on to 96, maybe getting back up to 97, but we are down 4.68% on the day. We'll get back to Palantir in just a second. We got Grab that's down about 0.5% as we open up the market. Robinhood, their SEC case is now gone, which is good for Robinhood. That's up 1.5%. Meta's at 686. Nvidia's at 137. That's up 2%. Tesla, not really holding on to the gains they had off that FSD China news in the morning. Back to 339. Microsoft goes red. Google slightly green, up 1.4%. SMCI is down 4%. 10K should be out hopefully soon. I mean, tomorrow's the deadline, so I would imagine it comes out soon. But SMCI, no 10K yet. That's down about 4%. Apple is up 1/3%. So Apple investing $500 billion. Looks like the market is getting a bit more positive on the news. That's green. S&P 500 is green. The cruise lines are also green. BABA down 6%. Steve sold his BABA as well this morning, he told me. So he took advantage of the strength and he took some chips off the table when it comes to Alibaba. I do think there are some people that have been bag holding this thing for so many years that they're ready to finally get liquid on it. Down 7%. To me, that's just people taking profits. And so that probably makes sense. Rocket Lab right here up about 0.47%. They have earnings coming up very soon. Nubank, 1138. That's up 5%. Nubank got just destroyed on Friday, down almost 15%. So Nubank right here, 1138, a little bit of a rebound, up 5%. SoFi goes red, 1467. That's down. Palantir again, barely holding on to 96, 95, 95. Currently right now, Berkshire Hathaway 483, Robinhood 5225. Robinhood as well, very fragile. I wouldn't trust this Robinhood green on the SEC suit being dismissed because Robinhood was in a downtrend. I think it's going to stay in a downtrend, and I think we could see below 50, which I would get really excited at 45. I mean, if we hold on to the 50 support, I think that'd be great, but I'm not really trusting Robinhood to make a reversal and get back into that mid 50s levels or even into the 60s. Celsius right here is up about 2%. Archer's down about 1.2%. Neo's down 0.5%. InnoData is up 6.7%. That was a small cap that had good earnings last week. CrowdStrike's getting investigated. They're down from 440 to 403. So they're getting hit. Mercado Libre is up 1.4%. Broadcom's basically flat on the day. Palantir 96.77 trying to hold on. Robinhood 52.65. SMCI down 2.5%, a bit of reversal. And then Nvidia right here 137.64. Where is HIMS? HIMS has earnings today after the bell. They're down another 3%. They were down 25% on Friday based on the semaglutide shortage and also their acquisition of a peptide facility, which is, you know, it is what it is. It went from 72 to 47. Again, a lot of people questioned if HIMS should have even been reaching the 70s, but now it's down about 3.5%. And we're going to see after hours kind of how their earnings plays out as well later today. Nike is green. All right. So some of these value stocks getting a bit more green. Wow. Nike up 5%. Huh. I would imagine Coca-Cola is green as well. Coca-Cola is basically flat. I think we're getting a little bit of a shift into some of the value names. Berkshire is green, so that makes sense. McDonald's red, Enovix is red. Unity is diluting by about $500 million. They're doing convertible notes for $500 million. So you're getting some dilution there on Unity. Oh, did I say peptide? It's peptide. At least I didn't say pesticide. Yes, peptide. Peptide is what they bought. But I think that the semaglutide shortage is the bigger thing for why it's getting hit more. Google is 184. That's up 1.5%. That hit 179 on Friday, dude. That one got hit bad, but getting a little bit of a rebound right here. Microsoft, even with the quantum news, is getting hit 406. If we see Microsoft below 400, that would be quite interesting. We haven't seen that in about, I would say, 8 months. Last time we saw Microsoft at 400, 383, August. Yeah, it was August 5th. So we haven't seen Microsoft that low since August. That would be interesting to see if it gets back there. What do you think about TLT? Okay, so I don't hate TLT right now, but you've got to be betting that rates are definitely going to come down for TLT to get the benefit. And so far, the 10-year that has gone from 4.8 to 4.5. Let's check the 10-year right now. The 10-year is 4.445, up very slightly on the day. I think it's not a horrible bet. The 10-year is either going to come down either with a recession or with inflation coming down. It's going to be one or the other. And I hope it's inflation coming down more than a recession for everybody's sake. But I don't hate TLT at these levels. I don't think yields are going to 5-6% unless, Bank of America did put out some research on Sunday night. They said they think CPI is getting back to 4.6%. And now Bank of America has been pretty bearish about inflation the past couple of months. They even said in early January that we're going to have 0 rate cuts for the rest of the year. Palantir right here back up to 98.30. So it makes sense that they think inflation is going higher. If inflation does get that high, I mean, yeah, we could see the 10-year start to spike up, and that would be bad for TLT. So I think buying calls on it is just scary, because if you're wrong on the timing, your calls get hit. But if you want to park money there, I don't think that's the worst thing in the world. It's just calls on anything right now are a little aggressive, just because we have no idea if this market is definitely heading up or heading down. Uber right here down 1.7%. Again, on Friday, Dara announced that him and Tesla are going at it when it comes to competition in June in Austin. They are not going to be working together. They're going to be competing with each other. So that is not a rumor anymore. That is confirmed. And so Uber and Tesla will be going at it starting in June. Rocket Lab right here, 2379. S&P 500 is up 0.34%. Again, even with some of the red that we're seeing in individual names, the S&P 500 is green. The S&P 500 is basically at all-time highs. I mean, it's down a little bit, but it's not one of those things where anyone can necessarily be upset about. SoFi right here, 1477, that's green. Costco, I heard Steve hijacked SoFi Weekly, and he turned it into Costco Weekly. And people were a bit upset about that. So I saw the comments under Tanner's video. I was like, when did this turn into Costco Weekly? And Steve was like, well, if they're going to invite me on the show, I'm going to talk about what I want to talk about. So Steve is unapologetic, but people got some education about Costco over the past couple of days. Microsoft right here, 403, that's down 1%. Costco's down as well. Netflix actually green, 1,014. That is up right now as well. Palantir's recovering a little bit, trying to make its way back to 100. We are at 98.37. Let me just check resistance at 99, see how bad the wall is. But it's nice to see us bounce from 95. That is a good sign, not a bad sign. Let's see, 99, we are looking at, yeah, there's not really resistance. I mean, it's like 10,000 shares. So I wouldn't say it's crazy to crack that level. It's just a question of how many people continue to sell into this weakness. 97.83 down about 3.4% here right now. Again, Netflix is green. SMCI is still down 3.2% on the day. Fubo has earnings this week as well. That's going to be an important one. I know a lot of people hold that one. Fubo, that's up 6.3%. So that one's getting some love right here. The main earnings for the week outside of NVIDIA is going to be Snowflake, Salesforce. You got HIMS that's going to be happening today. Zoom, Intuit, Home Depot, Kava, Workday. You got a lot of these retailers, Lowe's, TJ Maxx. Obviously, you got Fubo, you got HP, you got Dell, you got SoundHound, you got Monster Energy, you got Archer, you got Duolingo, Teladoc, Instacart, eBay. So still a lot of companies this week that are going to be really important to kind of give us a gauge on where the economy is going. We got Papa John's. We'll see if they're a little bit better than Domino's today. But overall, will be a strong week of earnings to end out Q4 with NVIDIA taking the cake on Wednesday. Nubank right here, 1152. So that's rebounding up 6.5%. For anyone who bought the dip on Nubank, that's doing okay. Archer, wow, down 2.4%, 890. Not surprising me that much, given Archer's risk off or risk on, and makes sense that it's getting a little bit of a hit right now. Rock Lab also has earnings this week, 23.64. I have a bunch of puts on Rock Lab at 22. I wouldn't be that afraid of getting assigned those shares at 22. I have really no idea what's going to happen at Rock Lab because it gave up that whole 27 to 29 support that it was holding on to, which at this point in hindsight, we can tell that support was a function of like the market being elevated, not Rocket Lab being elevated, because as the market took a hit, that support kind of went away, but it's holding on to 22, 23. It hasn't even touched 22, which is nice. And I guess we'll see what happens with earnings on Wednesday and see how that plays out. Amit, what are your thoughts on Dell? I like Dell. I hate their operating margins, and I think Dell hates their operating margins too, because they never talk about it on their earnings. It's the same problem with SMCI. I mean, SMCI has better margins than Dell, right? So, but like Dell's in a great spot. And when it comes to GPU servers, it's just they don't really make that much money off of it. They have a big backlog of like $3 billion, which is up like 300% year over year, but they don't make money off of it. So I think Dell will have a good earnings, but I think NVIDIA's got to really deliver for the street to be excited about buying all the VRTs, VSTs, Dell, SMCIs, et cetera, to still believe that there is a lot of room in the data center infrastructure space and energy space that a lot of these companies are basically preaching to us about being, some of the most important stocks in the in the build out. Palantir 9640, not holding 97 or 98. 9501 was the low. If we crack below 9501, probably have a little bit more pain to see. But right now we are down. Nebus is tanking as well. Nebus, yeah, that's down 9%. I still don't know what Nebus does. I know a lot of you guys have been excited about this one. I just have not had the time to look into it. But this one also a function of kind of the market taking a hit. 50 to 36. Now, granted, it was 24 at the beginning of the year, went to 50. Now it's at 36. Very similar to Robinhood. Robinhood was 38, went to 65. Now Robinhood's at 52. Like, can you really blame it? No. Can you really be upset about it? No, unless you bought the top, the short-term top. And if you did, it is what it is, right? Like, sometimes it's unfortunate timing, but I don't think anyone can necessarily be upset about some of that price action. Very welcomed pain. Yeah. Very welcomed pain, I think, is what a lot of people are. Same thing on Hood, dude. Like, you don't see me stressing on Hood. Like, I knew at 66 it was aggressive. Like, and like Hood's a proxy on the bull market. Market's taking a breather. Hood's gonna take a breather. It is what it is. Like, this is really a play that I'm in for the next decade. I have no interest of selling my shares, no interest of selling covered calls. Like, I genuinely believe they're gonna be fine, but there will be ups and downs. Same thing with Palantir. There will be ups and downs. And now that the name has a lot more attention, there's gonna be people that gloat on the downs versus the ups. But it's something you got to just take on the chin as a Palantir shareholder. Microsoft is touching 400, 401. It touched 400.77. Very close to below 400 today. Very close to below 400 today. Where's NVIDIA? Where's NVIDIA? Look, here's my thoughts on NVIDIA. 137.13. Dan Ives came out. He says NVIDIA is going to deliver a monster quarter. He believes that NVIDIA is going to be fine. He does believe that demand is outstripping supply 15-1. So he thinks that there's not going to be any issue when it comes to demand. The street wants $38 billion and 85 cents of EPS. I think more realistically, they want $40 billion and 90 cents of EPS. I think they'll deliver the revenue. I don't know if they'll deliver the earnings. Because I think NVIDIA's gross margins might take a little bit of a hit. I mean, they already took a hit last quarter. If they take another % down or another 0.3% down, that's probably not going to get them those 90 cents per share. But as long as they can, deliver the guidance for 2025, that's going to be important and way past street expectations, then I think they should be okay. Dan Ives says, we expect another robust performance and clear beat and raise special this week from NVIDIA that should calm the nerves of investors as the godfather of AI, Jensen, lays out the massive demand drivers for Blackwell and AI CapEx fueling this fourth industrial revolution. And so look, I'm not selling any covered calls on NVIDIA. I think NVIDIA is going to be fine. I don't think they're going to be, I don't think NVIDIA has to gap up to 150, but I definitely don't think they have to go back down to the DeepSeek lows. So from that perspective, I think NVIDIA should be in a decent position. Now, we did get some news over the weekend that, let me just pull this up real quick. This is what Trump said as well. Apple has just announced a record $500 billion investment in the United States. Thank you, Tim Cook and Apple. So Trump is also very happy about the investment. We did get some news on Microsoft, and that's probably the reason why Microsoft's falling right now. So Microsoft is reducing the number of leases they had on their data centers, the data center checks that they had. So TD Cohen said, our channel checks indicate that Microsoft has canceled leases in the United States totaling a couple of 100 megawatts with at least 2 private data center operations. They have pulled back on the conversion of 500 to leases, and they have allocated a considerable portion of its international spend to the US. When coupled with our prior channel checks, it points to a potential oversupply position for Microsoft, which is actually a little bearish for NVIDIA, but there's more than meets the eye to that story. By the way, where's Palantir? Palantir 94.30. All right, there you go. Wow, we hit 93. There she goes. Look out below. Look out below. Palantir getting hit 7%. So now Palantir is down from peak to trough at these levels 25%. 25%. So instead of a $280 billion company, it's a $220 billion company. Down 7% here on the day. Okay, in terms of that Microsoft news, so here's a text I got from one of my friends who's close to the space, and here's what he said. He said, the news is overblown. The TLDR is that Microsoft lost the bid on OpenAI's compute work, when we talk about Operation Stargate. So the data center is being shifted to Oracle from Microsoft. So net total data center build out is the same. The article made it seem like less ROI, but in reality, it's more hyperscalers are backing out, and Microsoft is an example. So I think for everyone who's freaking out about the Microsoft data center news, to me, from my understanding and from some of the people that I'm talking to, that data center demand just shifted to Oracle over Microsoft. which means the demand is the same. It's just the allocation of that demand is going to different players, which is okay. Maybe not the best for Microsoft, but definitely not the worst for NVIDIA, because NVIDIA benefits regardless of who's setting up the data center. And part of this makes sense because they lost the OpenAI bid because Oracle is collaborating with OpenAI on the Stargate operation, which is going to be $500 billion invested over the next 4 years in the United States. And SoftBank is going to be funding a lot of that as well. And we got some news updates this morning that SoftBank is going to be continuing to fund those operations. So to me, bullish NVIDIA, not the most bullish Microsoft, but Microsoft probably doesn't need that many data centers either, which is likely why they back down from this. If you watch the new Microsoft podcast that came out with Satya Nadella a couple of days ago, he did kind of scare people by saying, if we don't grow GDP by 10%, AI is not going to matter. And so I think a lot of people also took his word seriously, and they're expecting a really big quarter from NVIDIA, because if we don't grow GDP at these astronomical levels, then why are we spending all of this on CapEx? And so Nadella is definitely convinced there will be an ROI. The question is when it's going to happen. And I think that's what everyone's freaking out about right now as well. Palantir 94.33. We did hit 93.77. We touched 93 again. Currently down 7% on the day. Nate says only 220 billion. That's cheap. Look, you got some people like Nate that obviously feel 220 billion is still incredibly expensive for a company that's barely doing 4 billion in revenue. And I don't disagree. Obviously, 220 billion is incredibly expensive. Now, it's a question. I think what's happening with Palantir is it's a question of, do the fundamentals, which probably mean the stock should be lower than even 94, outweigh the narrative? Or is the narrative going to fight back? Because all of us objectively can say the stock's been trading on narrative, not fundamentals, as it ran to 125, which is part of the reason a lot of you guys have not been buying on that run to 125, because you knew that this was more narrative driven than fundamental driven. And a lot of you guys, again, bought years ago, and you don't really need to add to your position, especially if it's running off something that's not fundamental. But this now becomes a perfect debate between the people who care about the fundamentals versus the people that care about the narratives. And a lot of that probably will be influenced by the macro and how much the macro is going to be driven by fundamentals versus narratives. Palantir 93.67. There you go. We got a new low on the day. Just went below 93.77. Down 7.5% here right now. Hood is trading at a 33 PE, which is amazing. Yes, Hood is actually getting cheaper, like as it comes down, because the growth is getting stronger. So I do think, my answer to people saying, is Hood a dip buy? Like, yeah, it's obvious. Like, to me, obviously it's a dip buy. Like, yes, if you're bullish long-term Hood, but that dip can keep dipping if the market takes a turn. Remember, if the market goes bearish, guys, Robinhood's trading volumes go down, especially on crypto. And so their quarterly growth numbers are just not going to be that good. And we got to be honest about that. And so this dip could keep dipping, but do I like it at these levels? Yeah. I liked it at 55. I liked it at 51. I really love it at 45 if we get there. But it's reacting right now to a broader market sentiment shift, which means that I don't think you have to be super aggressive on buying. But you definitely don't have to be super scared at these levels. I think it's different from 65, but it's still elevated compared to where it was at the beginning of the year. I'm getting a call from someone. Let's pick up his phone and get him into the show. Steve, good morning. You're on the Market Open, or you're live with us on the Market Open. You're not on the Market Open.
There's one word that people used to say to me, momentum, and that works both ways.
It does work both ways indeed. That is correct. That works both ways, sir. Palantir is 5 cents away. No, never mind. It's not 5 cents away. It is now at 92. What's your take, Steve?
I think I just saved myself a lot of money.
Well, we're getting some momentum to the downside now. There you go.
We're getting some momentum to the downside is right.
So, I mean, tell me what your take on this. Why do you think this is happening? And then the broader market. How do you feel about some of the red we're seeing?
Palantir should have never got to the level it was at. It is a phenomenal company. They're doing things nobody else can do. They should trade at a premium because their moat is incredible. And they have the largest companies doing business with them. Their net dollar retention is at a good level. Zero debt. And they are a growth machine. At some point, you can pay too much for growth.
Yeah.
And Palantir being a higher market cap than Cisco is insanity. and being within 40 billion of Salesforce is insanity. And I am glad that the insanity is starting to leave, because this is just, it should have never got this high, ever. The fact that it pumped more on the NASDAQ news than S&P news was a telltale sign, considering how much bigger the S&P index funds are than the Qs. And it's just trading at 100 times earning, 100 times sales was insanity. And I think people really need to realize that great companies, even though they're a great company, their stock can become ridiculous in the short term.
Yeah, I mean, the market giveth, the market take it away. Let me ask you this question. Let's say the pump to 125 was institutional, and now the institutions are seeing a 25% decline in a matter of like 3 days. How do you think the toots are thinking about this? Do you think they're buying the dip? Do you think they're saying, let me get the hell out? How would you be?
I wouldn't be surprised if this move down is being triggered by stop losses, people buying at 110 or 120, throwing a 115 or a 105 stop loss on, that type of thing.
Yeah. Yeah, I think that's fair. I don't think this has to do with Carp selling $1 billion of shares or a Pentagon news.
It doesn't help.
It definitely doesn't help. I agree. It doesn't help. But I agree with you. I think it was extended. Market's taking a breather. I mean, instead of being up 60%, it's up 30%.
Am I saying it can't go back there? No, that's not what I'm saying. It can easily go back there. I don't think it goes back there this year. I mean, look, a more realistic level is 60. A much more realistic level. And at 60, a lot of people still made a lot of money. And when you look at what Palantir is expected to do, keep in mind, this is still a company that is only expected to generate 56 cents of earnings this year per share, 70 cents next year, and 95 cents in 2027. So let's just use $1 for 2027 to make the math easy. At the current price, it's still trading at around 91 times 2027 earnings, 92 times 2027 earnings.
Yeah.
That is ridiculously expensive.
Yeah. I mean, I think obviously the stock was trading on narrative versus fundamental. So right now the bulls and bears are kind of having it, or not even bulls and bears, but the fundamentalists versus the narrative driven buyers are debating on the stock right now. Right. And either the narrative people are going to win or the fundamental people are going to win. But the narrative has been winning for the majority of the year. Now, not winning as much. And we saw this with Tesla as well, right? When Tesla was at 480, that was really off narrative. And then fundamentals came in and it took a little bit of a dip.
You know what I love? And obviously I'm not reading the chat, but I love how continuously when I say things are overvalued, I keep being told that I don't understand growth. And I really think people just don't understand investment.
Yeah, I mean, look, at almost 300 billion, I don't think anyone with a brain could say that Palantir was cheap. And so,
I mean, at Tesla was 452.
Yeah, I mean, Tesla was pushing 2 trillion. Like, I guess.
I mean, and this is coming from somebody who thinks Tesla is going to be the most valuable company in the world in the next 10 years.
Yeah.
But at some point, people have to be realistic about things. And I mean, you're paying 26 times 2032 earnings at this point. That's not a good investment.
Yeah, look, and the other thing is, look, even if they get the Doge contract and all that stuff, a lot of that still is narrative, and that narrative has to fight back against the math. And we're gonna see. Also, I mean, look, this is like, we just gotta be honest about it. Carp and Sham, and they sold like, I think, close to a couple million shares on Friday. I mean, they sold at $100, $102. They sold for a reason. They're also taking some profits.
And they have every right to.
Yeah.
Look, these are people that did not have a liquidity market pool to pull from. They had shares locked up for 2 decades when this was in the private markets. They really didn't have an avenue to sell. And they finally have an avenue to sell. They created a phenomenal company. They have every right to take a profit. Every right. Nobody can be mad at them for doing that. Because you know what? Everybody that's in their situation would have probably done the same thing. But at the same time, you don't see any insiders buying Palantir.
Yeah.
So if insiders are selling and it has this crazy of a valuation, it's hard. I mean, did people really think this was going to 150 or 180? I know the answer is yes.
Oh, the answer. I mean, if you saw the call option volume, the answer is yes. Yeah.
Yeah. People thought that this was going to keep going. And while I was worried that it could, and it had the potential to keep going because of the momentum, I continuously said it didn't make any sense because it is so far ahead of its skis at this point.
Yeah, and also it's not healthy. It's never healthy for a stock to be trading that above its intrinsic value because now look, Palantir down from 125 to 90 makes the stock look stupid in terms of its chart, when in reality, as you said, it probably should have never got there in the first place. And it makes people look dumb for even seeing that it got to those levels, but it traded on narrative when it got to 125. Baba's down 9%. Any thoughts on why Baba's getting hit as badly as well?
No, I'm not following it. I'm out of Baba. So
yeah, so you kind of sold into strength with the rest of the market here.
Yeah, I mean, I was down for a long time. I got my cost basis. I don't even know what it was at. It was around 100. Maybe it was just below 100, something like that. But yeah, when it got up to around 135, 140, I hit the sell button. And I said, you know what? Even though I think it's worth 2 or 250, I got my money back. I made some money on it. NVIDIA earnings are coming up. I rolled into NVIDIA. If I buy it, I could very well buy back in the Bob next week. I think Bob is a phenomenal company, but I think that NVIDIA is going to have a incredible quarter. I think their guidance is going to be super strong based on all the guidance that we've seen. So I'm going to ride that wave for a little
What
bit.
happens to the market, which is pretty much going red across the board now?
Don't ask that question.
If
You don't want that
if
answer.
NVIDIA misses, what happens to this market, Steve?
You really want that answer?
I want that answer. I can handle the truth.
All right. Well, if you can handle the truth, the NASDAQ's not going to be down triple digits. It's going to be down quadruple digits. You're not going to get a NASDAQ down freaking 400 or 500 points.
And it's going to be ugly.
I should say the Dow, because that was probably what I was looking at. That was down 750. The Dow will be down quadruple digits. The NASDAQ will probably be down 500 points. It's going to be bad. That's just one day.
What's the percentage chance on NVIDIA missing earnings, in your opinion?
It's a coin flip. Everything's 50-50. Either it happens or it doesn't.
I think it's more. I think it's less than a coin flip on the missing earnings.
It's either they make earnings or they don't. You have two outcomes. Where do the variables stack up? I think the variables are implying that they're going to beat earnings.
Yeah, I mean, I think they beat. I think where you're right on the coin flip is like, what does the guidance look like? Because look, all the hyperscalers are spending on CapEx, but we still don't officially know if NVIDIA is going to capitalize on all that CapEx yet.
Well, but we know that they are going to be a big beneficiary and they can't keep up with demand. So that's positive.
Correct. That is positive. That's right.
So, I mean, I think they're going to beat. I think they're going to have a guy in trees. I mean, Wedbush put out the same thing earlier. So, I mean, not saying much because them and Tom Lee are super bolds, but
yeah. Robinhood below 50, folks. 49.92 on Hood.
Where's Hims at? Is Hims going down too?
Oh, Hims is 45.03. That's down 9%.
Yeah. Oh, look at that. What was I saying? That these companies are going to all sell off. Look at that.
Yeah, well, look, I don't think it took a genius to realize that we got really hot in February. And
no, it took people that don't get emotional about the market.
Yeah, and also look, here's another thing. I want to say this because I didn't sell any of my Palantir. I didn't sell any of my Robinhood. But that's
neither did I.
Right, because we're holding on for a decade. So for the far majority of people that are listening to us right now, you probably don't need to time that little itty bitty moment where you get 65 on Hood or 125 on Palantir. But it still hurts, obviously. It's just
look, it's not fun. You don't want to see people lose money. But the big thing is, and I see people saying it all the time, well, if you thought it was going to go down, why didn't you sell? Well, the tax implications.
Yeah.
Why would I want to sell at 120, pay the tax to the government just to buy back in and lose those shares?
Correct.
and play that game. It's not worth it.
Correct. 100%. 100,000%. It's just, again, it's annoying to see your net worth go down, but it's not like selling was the solution.
You know what's funny? My account balance is not going down because of my covered calls.
Well, there you go.
So I'm not even feeling it because I didn't have that money anyway.
Yeah, no, that's a good point. I mean, this is why covered calls are useful. That's correct.
I mean, if Palantir goes back down to 60, like I think it's going to, or that I feel it should, I'm going to buy back every last covered call immediately.
Okay, so here's the question. Do you think you're being a little too greedy waiting to buy back the covered calls, or?
Probably.
I think you are, but
I can't predict what's going to happen. But just as people thought it was going to 150 or 180, I didn't think it was going to stay at this level. And look, this could be a shakeout. Maybe it goes to 80. I don't know. But I don't think it's getting past 100 anytime soon.
yeah. Yep, that is fair. Oh, in general, the broader market, why do you think we're taking a breather? Like, is there a reason in your opinion?
I don't know. I'd have to look more into it. It's probably because of the PMI data. People are probably waiting on economic data this month or this week, actually. I mean, I don't know.
Also, block, bro. Holy crap, 67. My goodness.
Yeah, it needs to keep going down so I can buy more.
Yeah, that one's getting hit. Archer's getting hit. Celsius had a good pump last week, but that's, I mean, at this point, it's algos. Amazon's down 15% from the highs. I mean, everything.
Look, if block goes to 50, like that's one of the most screaming buys you could have.
I don't love block, but I hear your point.
I don't care about management. I don't really care about the company, but the bottom line is you look at their earnings growth, 32% this year, 24% next year, and 25% in 2027. They're expected to generate $4.45 of EPS over PE of less than 16 at this point.
Yeah.
I mean, it makes sense from a dollar standpoint. So I'm fine buying it on the way down the same way I did with PayPal. PayPal worked out pretty good for me.
What do you think about Buffett having almost $400 billion in cash?
Who cares?
What do you mean? Who cares? He's Buffett. You can't be that egotistical to not care about Buffett.
It has nothing to do about egotistical. Okay, too many people care about what Buffett does
Because he's Buffett.
No, but that's exactly my point. The guy is not some super investor. The guy put together an amazing company, which is basically a holding company. He bought the right. Look, I'm not taking anything away from the guy. I'm not taking anything away from the guy. He did something not many people or nobody else can replicate. Okay, bought all these great companies and created something nobody's going to create. But from an investment standpoint, what has he done? What is he called? Like, really think about it. He has bought a lot of boring stuff, and he sits and waits.
I mean, first of all, Berkshire has compounded 5 million % since 1960. The S&P has compounded 40,000.
I get that, but from an investment standpoint, he is not even in top 10 investors.
I disagree. Okay, I would disagree.
Chris Camillo is a way better investor than Buffett.
Okay, hold on. You're not going to say Chris Camillo is a way better investor than Buffett. Buffett manages hundreds of billions. Chris Camillo manages like hundreds of millions.
It doesn't matter.
Oh, well, then I'm a better investor than Buffett if I manage.
Forget the overall number. Forget the overall number. Okay. There are too many people that have gotten a lot of things right that have a higher ROI than Buffett. Did Buffett get Amazon? Did he invest in?
He missed tech. Yes, he missed tech, but that does not mean that he's not worth looking at in terms of his moves on the market.
I'm not saying that he's not worth looking at, but the guy's still buying Sirius XM radio.
Yeah, I don't know how to make sense of that one. I don't know how to make sense of that one.
I mean, listen, the guy's still buying Sirius XM radio. The guy was freaking funding the Kraft Heinz merger and had a ton of capital locked up in that. You actually go through his portfolio. Would you own half those companies?
No, I'm a different type of investor. I don't want.
And I'm saying from somebody who loves income investing, I wouldn't own half those companies.
Okay, well, regardless, he's holding on to this much in cash. Do you think it's a warning or?
No, he probably wants. I think no, it hasn't happened. He probably wants one last hurrah before he leaves, and I think he's going to go on an acquisition spree. I think he's going to buy Occidental Petroleum. I think it makes sense. He's a huge shareholder. He has a huge energy portfolio in Berkshire, and I think he's going to buy some companies.
All right, last question for you, Steve. SMCI down 9%. What do you think happens with this one now?
Tomorrow's D-Day. They need to file. They don't file tomorrow. It's going to be a waste.
Yeah, I agree. Tomorrow will be important.
It is what it is. Palantir 90. Palantir's down $10. What do you know?
Palantir. Wow, we are 60 cents away from below 90.
And look at the amount of shares traded already. 90 million shares at 10.05.
Wow.
People are getting the freak out of this.
Yeah, Tesla 326, Rocket Lab 2190. It is aggressive right now. It is aggressive.
Yeah.
So
keep going too.
Yeah. All right, Steve. Thank you. Appreciate it. Steve's Twitter right there in the chat. You guys can check him out. We will. I'll talk to you soon after this.
And Costco's overvalued. Remember that.
Also, hold on real quick before Steve leaves. Okay. So, guys, I started a new show as I was sick over the weekend because I finally needed a new show to watch. And I found a show that actually can keep my attention. And if you've been part of the channel for a while, you know it's really hard for me to watch shows. Steve thinks the show I found is not an all-time great show. And I'm flabbergasted by the fact that he thinks it's not a great show.
My exact words were, it's good, not great.
Can we just get the chat to back me up on this? The West Wing is an all-time great show. Can we get the chat to back me up on this? Because he actually thinks like that's
it's
not
great.
No, it's phenomenal. It's not good. It's not great. It's phenomenal. Okay.
It's good, not great.
I'll let you know what the chat says. I'll let you know. All right. Talk later.
I mean, what do they say?
Let me do a poll real quick. It's kind of 50-50. You better not win this. Dude, it's a good show. It's a good freaking it's a great show.
Good show.
No, it's a great show.
It's not great. It's not top 10. Right? Not top.
I watched it 10 years ago, and over the weekend I realized why I watched it so long ago. Okay, so the poll is West Wing good or great? What do you say? Let's see. And I'm putting good as the first option, so I'm giving you the benefit of having good as the first option.
You can't put it against shows like 2.5 Men or
what?
Or Big Bang Theory or Sopranos or Entourage. You can't put it in that category.
Palantir, by the way, below 90. Yes, it's better than all of those shows.
Or Seinfeld. No, it's not. No, it's
what?
not.
I can't, dude. You guys really. After I'm sick, you guys can't back me up on this. 80% of people are saying it's good, not great.
Yeah, it's good, not great. Listen, I don't blow things out of proportion. I call it the way it is. I give credit where credit is due. It's good, not great.
I just don't think any of you guys understand TV. I really don't. Like,
this is coming from the person that's seen like 5 TV shows.
Dude, the West Wing is, I remember like over the weekend, I was like, you know what? I need something to watch. I turned on the West. I was like, this is a great show. Why have I waited 10 years to watch the show again? And now everyone's telling me it's a horrible show. Like, this is insane, bro. Insane.
I mean, it's good, not great.
All right. I'll talk to you later.
Later.
How do you guys not have my back on that, dude? Like, I really thought I had an argument against Steve. Like I really thought I was going to win this one. That's sad, bro. That is sad. All right, let's get an update on CNBC. Things are crashing right now. We'll keep going from there, but we are seeing a lot of weakness right here in the broader markets.
Mentions, right? This is continuing to be a source of uncertainty for corporate America. You can look at S&P 500 companies and people actually chart this about tariff mentions. Obviously, it's skyrocketing as companies try to prepare for what it's going to look like, what it's going to mean for their cost structure, what it's going to mean for consumer demand. I do think one of the big debates, guys, is going to be the tariff impact on the economy. Everyone was worried about it being inflationary. It might just be a one-off inflationary. It might be a bigger problem for demand, like demand destruction and the actual economy. Last time we got tariffs, the Trump administration likes to say we didn't see a big spike in inflation. We didn't. But a few months later, the Fed was cutting interest rates. I'm not saying just because of tariffs, but there's potentially concern here about the economic impact. Again, we don't know what they're going to look like. We don't know how much of it comes to fruition. We don't know how long it's going to last. But That's potential worry.
Well, sir, it's funny because on that front, the two things that we've talked about for a long time now in terms of causing inflation, tariffs and/or deportations. The sense I've gotten is that if you were to follow through on a mass deportations, very much unclear whether that will happen, that would have a much more significant impact, certainly on wage inflation in agriculture, construction, hospitality, certain parts of the economy.
Yeah, I mean, we've already had it.
All right, so CNBC is saying the tariff stuff is the reason we're red. I think that's probably one of the reasons. 89.56 on Palantir right now at 91.23, so it bounced off 89. Yeah, we are red, folks. Microsoft down 2%, Baba down 10%, S&P down 0.5%, Nvidia down 1/3%, HIMS it was down 9%, now it's down 6%, Rocket Lab down 22.36, down 5%, SoFi. Okay, 1381 was the bottom on SoFi at 10:30, or sorry, at not at 10:30, at what time was this? At 10:09. Are we seeing that V shape across the market? Hold on. Yeah, we're seeing the V shape across the market. 131.93 was the bottom at 10:09 on Nvidia. Palantir was 89.56 at 10:09. Rocket Lab, it was 21.72 at 10:09. So far we're seeing a V shape off 10:09. It's only 10:11, so it's only been 2 minutes. Not enough data to tell if that's a legit bottom on the day. Very similar to 3 days ago, 10:02 was the bottom. At this time, it's 10:09, maybe, if that's the bottom. 50.26, that was the bottom on SMCI at 10:09. Netflix, 984. Hood was at 48.53. Now we're at 49. Maybe that is a little bit of a small V shape we're seeing right now. Definitely tons of algos. Definitely tons of algos right here. What's the VIX? The VIX is up currently 5%, which makes sense with this type of volatility. So apparently the Friday sell-off is continuing. The Friday sell-off didn't kind of reverse from the futures that were green yesterday. Meta had 670. But the question is Tesla as well, 324 at 10:08. That was, at least for now, a bit of a bottom. If we don't test those levels again, maybe we're in the clear for the rest of the day. Again, we have a lot of hours left, so we'll see. Grab as well. Grab hit 467, now back at 473. Grab kind of getting nuked with the rest of the market. Apple somehow is green off that $500 billion investment. Apple also being a flight to safety that people are going to. Nvidia just turned green. SoFi hit 1380. Now it's at 1406. And then Hood trying to make its way back up to 50 after falling to 48.53. All right, so what are you guys doing? Are you selling? Are you selling covered calls? Are you buying the dip? What are people doing? What are people doing right here? Is this pure algos? Definitely the 10:09 little pseudo V shape we're seeing across a bunch of stocks is absolutely algos. Will it last? I don't know, but each of these stocks bouncing up at least 2% from that 10:09 intraday low. And maybe we get to hold on to it. Now, for the companies that have earnings today like HIMS, I don't know what's going to happen. I mean, based on their earnings, this thing could go super up or super down. So I think this move is not going to be controlled by algos after the bell. I have no idea what happens to HIMS, bro. I don't understand the business well enough. I know it's up at more than 100% year to date. Got to 70, now at 45. Bank of America is super bearish, dude. Every report I read from Bank of America, they have like a $20 price target. So there's some companies that, or some sell-side firms that believe that the GLP-1 stuff is BS. It's not real. It's not sustainable. Some people think that there's a larger personalized medicine moat. One thing that can't be denied is their growth is phenomenal. So I guess after the bell today, we're going to see how the market thinks of it. Palantir 92.20, still down 9% on the day. Palantir has wiped out about $30 billion of market cap today. Now 215 billion. Was at 280 at the very top a couple days ago. Currently now at 92.17. We need a reverse bell, dude. We definitely need something to commemorate the new lows. We see. Amit, should we invest in a siren device when the markets are tanking, just like we have the cowbell for the market open? Yeah, maybe. Where's Bitcoin, bro? So we don't even talk about Bitcoin anymore because it's so boring. Bitcoin 94, huh? See, get Bitcoin below 94 or below 90. That's going to get really interesting. And when we get Bitcoin to that 80 level, you're going to get a lot about what's his name? Saylor bought another 20,000 Bitcoin on Friday at 97,000 a coin. He raised $2 billion on Thursday at a 0% coupon, didn't dilute shareholders to get that money. The premium on the strike price of that $2 billion is 433. So MicroStrategy stock has to be at least 433 for the bond holders to break even. And then he bought $2 billion a day after raising it on Friday at 97,000. So Saylor continuously buying those high 90s and just accumulating more Bitcoin. But we are lower than that price right now at 94,890 on the day. All right, let's do a year to date now for everybody. I think I asked on Wednesday, and I think the average was 30%. I was up 30%. Now my year to date is this is disgusting, bro. It's 4%. Went from 30% to 4%. 3.49% to be exact. So there you go. Well, now it's 5%. All right, so that's a little bit better. Well, it is what it is. The market giveth, the market taketh away. The market taketh away. Dude, that's worse than January. January, I was up 18% year to date. So now we've basically given back a decent chunk of what we had in January. I mean, it is what it is. This is what you got to get used to when it comes to markets, and covered calls are a decent way to hedge. I'm not more of a buy puts type of a guy, but definitely covered calls can print against these things. One smart thing I did do is I got rid of my Amazon calls and I just started buying the stock instead. Because as soon as Amazon dropped 5% on earnings, my covered calls did well, but I had a feeling that the market's not ready to give Amazon or any Mag 7, quite frankly, any momentum. So I think that was one smart move, to just get rid of the calls and get into the stock instead. But besides that, I mean, we're giving away pretty much everything we got in the beginning of January to an extent. I mean, Palantir was at 83 before earnings. It's at 92. So it's still up a lot from earnings. But during the beginning of the year, at the very bottoms, we were at 63. So 92 versus 63 is obviously substantially higher, but it's down from 125. It's not where it was at the very top. Yeah, I see a lot of you guys, 2%, 3%, 4%, 5%. Some of you guys are still up 10% or 20%, but you were up 40%. It makes sense. When will you buy more Palantir? Well, look, I'm not buying it at 92. I mean, look, I've been pretty clear about this. The valuation on Palantir since $65, $70 has been incredibly aggressive. And to me, I would need a real dip to get excited about buying more Palantir. And I just don't think this is a real dip. Why do I think this is not a real dip? Because I don't, at 125, I mean, like, it was almost $300 billion. Like, although I enjoyed the run to 125, which I'm sure a lot of you guys did, I also knew, like, hey, it's extended. Like, we were ringing the bell every 5 minutes on the show. Like, at some point, probably was going to get too aggressive. So I don't know. I want, like, I don't know when the time is to buy Palantir. I think that's kind of a game time decision, and I'll let people know when I'm excited to buy more. I don't think this is I don't think if you're trading on momentum down 30%, yeah, you probably buy, right? But the problem is, even at $91, Palantir is still trading on momentum because it's worth $215 billion. And that's not me saying it's expensive. I mean, the freaking company said that they didn't expect to be $70 till 2029. They didn't expect to be $70 till 2029. That's what their SEC filings say. And the fact that they got here so quickly should be a bit telling about how aggressive it happened without the growth. I mean, the growth is there, but it's not NVIDIA growth. It's not the type of growth NVIDIA showed in Q3 of 2023, where they went from, I think we went from $30 to $70 in like a day post-split, because of how aggressive, like, instead of doing 6 billion of revenue, they did 11 billion of revenue. You know, like, when you beat estimates by that type of a level, that's like a paradigm shift. Palantir had a paradigm shift without that type of a result. And that's why it was trading on momentum. So I don't know. It wouldn't surprise me if we head back to the 80s. It also would not surprise me if we head back to the hundreds, because it's momentum right now. But I guess we'll find out over the coming weeks. And then, yeah, the insider selling, that doesn't help. The insider selling does not help. But again, don't blame the insiders for selling. We got Chris Hager in the chat. Shout out to Chris Hager. He is data-driven investing. He's up 6.4% year to date. We look at his content on the channel all the time to get updates on SoFi. I'm going to put his Twitter right here in the chat for anyone who wants to check him out. He also has a YouTube channel. Let me get his YouTube channel. I think he's coming out with a SoFi video today. So let's link his YouTube right here in the chat. Oh, it's already out. All right, cool. So he posted 19 minutes ago. There you go. So Chris, also known as DDI, really great resource when it comes to SoFi. Very helpful to the broader SoFi community. There's the YouTube video right there in the chat. Definitely make sure to subscribe to him. And you can get some SoFi Q4 analysis. His video on the loan platform on SoFi is what really got me to understand what SoFi is doing in terms of mitigating the amount of risk on their balance sheet while also capturing a lot of the upside from their lending business. So, and probably, you know, if that loan platform can scale, we'll expand the multiple beyond where the street's pricing them at right now. SoFi 1406 down about 4.2% currently as we get into the 10:30 part of the day. Yeah, we got a lot of DDI fans in the chat. DDI is the GOAT. I would 100%, dude, I would not have bought my SoFi options without his analysis. I mean, like, SoFi has been one of those stocks where it's been a tough journey, right? Because the stock stayed down more than its peers, the Palantirs, the Rocket Lab, the Robinhoods of the world. Eventually it made its move. It just took some more time. And while it's taking its time, you need a voice of reason that can actually filter through all the BS and try to get people to understand what's going on here. And I think Chris and Tanner are probably the best voices of reason on the internet that have helped people understand it. SoFi right here, 1409. We got Robinhood 4882. So again, I have not bought the Robinhood dip since the decline, and it's kind of been for this reason. This is the one time I'm actually a little proud of myself. I haven't jumped the gun. As soon as I saw it break from the earnings uptrend, in my opinion, it was ready to go lower because the street was not going to let Robinhood go higher while letting the rest of the market fall down. And so this is actually very reasonable to me. Makes a lot of sense. I got rid of all my sold puts after earnings day. Made a good chunk of money off that on the pump to 65, but it would not surprise me to see this thing normalize around 45. Now, if we break below 45, that's like a really nasty decline. I think 45 is kind of where we stop the pain, but it also depends, right? How bad does the market continue to go down? S&P now below 600, Microsoft below 400. There you go, down 2%. Below 400, Palantir's down below 90. Palantir's down below 90. Bryn Talkington says she would buy more Hood in the 40s. Yeah, I agree. I mean, if it gets to the low 40s, I definitely will be buying more. I just don't think there's any urgency to get in while it's on its downtrend. All right, let's get some updates on Berkshire as well, see what's happening there, and then we'll keep going from there.
Meeting. And he's obviously said, Greg Abel, he's going to be in great position to take this. Maybe he wants to actually hand off a company with maximum flexibility and optionality with that cash position.
Maybe. Does the stock go down when Warren finally leaves the scene at all? Is it an opportunity to buy back a lot of stock?
Well, that's another piece of it. They bought zero stock back in the last quarter, and that just shows you it's a rich stock. But one of the reasons it's a rich stock is because it's so defensive. So much of his earnings, like 40% of operating income, is passive. It's interest and dividends from the insurance business, from all the stock holdings. So it's like nothing. It's bulletproof at this point in terms of downside.
Let's hear from Dan Niles.
Management founder and portfolio manager, Dan Niles. Dan, great to have you again. Good to see you.
Good to see you too, Carl.
So you will be focused on the April quarter forecast, eh?
I mean, I will be, but it's more, interesting to see what they have to say. My view hasn't changed at all, which is by the time you get to the middle of the year, you're going to get an AI digestion phase. The data that's come out at the end of last week, including Microsoft's CEO on a podcast, talking about he's looking forward to being a leaser of capacity by 27, 28, because he sees plenty of supply coming on, which means computing costs are going to drop. That tells me what I need to know. You got to remember the semiconductor companies are always behind the customers. The customers, they get a better look at what demand is, and then they will go ahead and change what the orders are after they get more comfort in the fact that that in fact is occurring. So I'm sure NVIDIA is going to be bullish on the call. Quite honestly, to me, I don't really care that much because I look at what the biggest spender of AI CapEx is saying, which is Microsoft. And one of the things that's driving the market down today is IR from Microsoft is in Australia. and they're sort of clarifying some of the notes that came out on Friday, and they're saying,
Right.
you know, we think supply and demand are going to be in balance by the end of our fiscal year, which, by the way, is June, so it's not that far away. And we think our CapEx growth is going to slow to more in line with our revenue growth. Well, CapEx growth is running 50 to 60%. The revenue growth is running mid-teens. So you look at that and you go, okay, well, that pretty much confirms the fact that CapEx is going to slow down. And so for the NVIDIA print, it's more interesting to just see what they have to say. Jensen looks out 10 years in advance.
I don't know. Meta, Google, Amazon, Oracle, they've all been ramping up spending in a big way.
Well, they haven't.
They
Because
haven't?
if you go, and I've written about this multiple times, look at Oracle. If you look at Oracle, Oracle came out and said for their next fiscal year, they're going to go ahead and double CapEx. So you look at that and you get incredibly excited when you don't do any of the math. When you do the math, you go, okay, well, their fiscal year ends in May. This implies 13.7 billion in CapEx. You already had 6 months go by. So that leaves 7.5 billion left to spend. In the most recent quarter, they spent 4 billion. So 4 billion doubled is 8 billion. That's not 7.5, right? So their sequential growth is actually going to go down in AI CapEx. But you look at the headlines and you go, oh, CapEx is doubling. That's fantastic. That's the problem with a lot of the analysis you're seeing is people aren't actually going through and doing the math, what it means sequentially. Much like with Microsoft today, there's a reason why after IR is clarifying this, the stock is going down.
So then,
Yeah, I'm sorry.
well, Dan, why would you go long into NVIDIA, into Dell, into Broadcom, all these supplier names we're going to get in the next couple of weeks?
Oklo, by the way, down 10% now at $34.
I didn't say I would be lying. I mean, that's my point. There's a lot of, much like the prior comment of, oh my God, CapEx is really strong. When you actually go and do the work, it really isn't. And the way you need to think about this is, you know, we all lived through, or most of us lived through the 2000 ramp up. And quite honestly, my view had been that, okay, we're going to go through an AI CapEx digestion phase in the middle of 2025. And then we're going to see a doubling in revenues from NVIDIA through the end of the decade because we still have a lot more CapEx going into inference coming up. The problem is there's not a lot of killer apps out there right now that are driving smartphone demand or AI PCs for that matter. And until you get to that, you have this mismatch between spending and what demand is doing. And think about Microsoft, right? They have a 49% economic interest in OpenAI, which started all this with ChatGPT 2 years ago. They guided below consensus when they reported the June quarter. They guided revenues below consensus when they reported the September quarter, and they guided consensus below. They guided revenues below consensus for the December quarter. That's 9 months now that's been going on. So that should tell you something about where demand and supply is when the guy who's hosting OpenAI is guiding below the street.
Well, yeah, but Dan, I mean, now Stargate's moving ahead without them. They're going to spend $500 billion. You know, we'll see whether it really happens. I talked to Safra Katz last week from Oracle. She seems confident the number is a real number. You point out inference and the fact that, I mean, can't we imagine a world in which enterprise really starts to adopt these agentic agents and they're running a lot of inference and there's just an enormous increase in demand over time, not to mention robotics. I'm just trying to think of things here that Jensen Huang may be talking about or will be talking about that are going to continue to fuel the demand for his company's products.
You're 100% right, David, but you got to remember in the short term, I mean, think about Cisco, right? If you think about Cisco and the buildup of internet infrastructure, that went on for 6 years. Cisco's revenues went up 15.5 times over 6 years with never a down sequential quarter. It did not mean that the stock didn't have a couple of 30% plus corrections as you went through these digestion phases. That's what I'm looking at right now. The thing that's sort of troubling me is if the biggest AI CapEx spender, they're looking out across everything. And they've been complaining about the biggest issue has been they haven't been able to get chips or power. If now they've kind of switched that, you have to sit there and go, okay, well, do you think they have a better view than all of us do? And if they're thinking that that's going to cause their spending to go from 50 to 60% growth to in line with revenues by the June quarter, right? That's the end of their fiscal year. which is mid-teens, then what happens to demand? It's not like internet demand slowed down in 2001 and 2002. It didn't stop the NASDAQ from going down 78% over 2.5 years as valuations came into more in line. And looking at Warren Buffett, talked about at his annual shareholder meeting, selling stocks, et cetera, more cash being raised. You have to think about it, especially when you look at valuation. So I've been saying this for months now, and the more data that's coming out, the more that looks likely. NVIDIA is going to be bullish, don't get me wrong, but you have to look at it from end demand and work your way back, not from what the chip guys are saying, who've been undersupplying for 2 years. And the customers will change on a dime, just like they did in 01, 02. And I think that's coming by mid-year.
So, I mean, look, we'll get actual answers from NVIDIA pretty soon. I don't think anyone officially knows what the heck's going to happen. There are some research firms, by the way, we broke the 1009 intraday low, especially on Palantir. So it looks like the algos potentially could be taking us lower right here. 89.52. We hit 89.36 on Palantir. A couple of research firms came out this morning and they said that they think NVIDIA earnings is going to lead to the market realizing that although NVIDIA might have demand, not all the semiconductor names are as ready to supply the amount of demand or have the amount of demand that NVIDIA is signaling. Kind of basically what Dan Niles is saying. Dan Niles is saying, hey, like there is demand, but it's not the type of demand that could lead to the sort of valuations or the expectations of valuations that the market's thinking in the semiconductor space. He's been bearish semiconductors since the beginning of the year. And there are some sell side reports that came out today saying, hey, we think NVIDIA is going to do well, but it's going to let people know that TSM and Qualcomm and Broadcom are not going to be the biggest beneficiaries of NVIDIA's earnings. You got a lot of the other more bullish analysts that are saying that's BS and that are saying that this CapEx cycle is going to be long and that NVIDIA is going nowhere. NVIDIA right here, 132, down 1%. Wednesday is going to let us know what's happening. Wednesday is going to let us know. And by the way, I kind of like that NVIDIA is selling off into earnings. I mean, I'd rather have NVIDIA at 130 or 125 than at 140 on earnings. It's just a little bit of an easier expectation to match up with. But definitely in 2 days, it is going to be the most important NVIDIA earnings ever because we are seeing weakness across the entire market right now. This is also very similar to 2024. I mean, I remember February of 2024, markets tanked before NVIDIA earnings. Like literally the day of NVIDIA earnings, market tanked. I remember I sold a bunch of stuff. I was raising cash. That ended up being the wrong move because 2024 was amazing. We're going to have to see if 2025 has a repeat or not. AMD is falling along with NVIDIA. Yeah, down 1.7%. Let's look at all the semis. Marvell is down 4%. Taiwan Semi's down 3%. ASML is green. Broadcom's down 2%. Intel, those acquisition rumors not really leading to much momentum, down 4%. SMCI down 6%. 10K still not out yet. AMD's down 3% or 2%. NVIDIA's down almost 1%. Qualcomm's down 1%. Dell is down 5% here. And Micron's down 1.15. Palantir continues to feel some pain at $90. Now it hit 89.30. That was the low. It was lower than 1009's low. Bounced right off 89 nicely into the 90s, but still struggling here on the day. Amit, you look at the fear and greed index. Yes, let's look at that up right now. Fear and greed. I would imagine we're definitely closer to fear. Yeah, we're in fear. We're very close to extreme fear, actually. So, I mean, look, this tends to be a relatively basic way to kind of gauge how things are going. And when you get to extreme fear, that's when buying the dip makes sense. A couple of weeks ago, we were pushing greed. We were like at the very end of neutral. But look, I mean, I don't know. I'm unfazed by this. Like, this is not, I think after the year I had in 2024, after the year a lot of people had, it was a good year. And you kind of just are humble enough to realize that that year is not going to repeat every single year. And it's going to go up. It's going to go down. It is what it is. Like, it's just not, I don't know. It's just not that scary. The other thing that makes it not as scary, and this just comes down to a personal finance situation, is do you need the money, right? Like if you need your Palantir profits right now, you're probably feeling more anxiety. If you don't, I mean, you're probably annoyed that it's down 10%, but you can't be like literally scared that you're not selling it at the right price to make rent, And so if you're heavy on margin, you're probably a little worried, like just basic things, right? That if you're not doing those things in the market, you're probably going to be okay. along with the fact that earnings growth has been pretty spectacular in Q4. And as long as that can continue in Q1, then, we should be okay as well. But I don't know. It's just not that stressful. It's just not that stressful. Everyone wants to get rich as soon as possible. Yeah, dude. And again, I mean, I felt this with Grab, dude. You try to say, hey, I think there's a thesis here for a double in 2 years. People are not impressed. And then the stock falls 10% after a really good earnings, which is something you're supposed to be excited about. People are not impressed. Like, it's just, and I remember what it feels like to be bullish about a stock and the stock not do well. I mean, I lived through Palantir for 2 years, right? Like, if anyone on the planet knows what it feels like to advocate for a company and for that company to be in the gutter for a good 24 months, like, it's me. But I remember during that time, that's when you do the most due diligence. That's when you get the most excited about it, because you know that eventually, if you believe in your conviction and your thesis and you see constant updates by the company, but the stock price is not reacting, that there will be a breakout. And the stock price tends to follow earnings growth, which is what I think is going to happen on Grab as well. But the fact that people are so upset and annoyed about it, like, to me, it made me realize, okay, we are in a market right now where expectations have gotten insane. Like, just insane, the amount of expectations people have on some of these names. And if the market can't live up to these expectations, then people are just going to be upset. People might end up leaving the markets. Well, it is what it is. But it's not something a seasoned investor, or not even a seasoned investor, an investor that's just like logical about the nature of gravity, which is that things go up and down. Meta, right, by the way, at 667. It's something I think they can make a lot more sense of. My ass is going back to work. Yeah, no more work from home and stare at Palantir all day. Those days are gone. We had those for a couple of days. And we had those for a couple of weeks, actually. Those weeks are gone now. My only concern is Leaps that I have expiring in June. Can't decide if I should sell them now or wait to see if it comes back. I should have sold at 18, but had high hopes and a lot of time left. Look, if you're up on Leaps, especially, those aren't even Leaps, right? Because they expire in June. So those are, you got 4 or 5 months left. I would not be in anything that is leveraged, that is short term. If your leverage goes out until late 2026, early 2027, I think you have a lot of time to allow the thesis to play out. You still might be wrong, but you have the time for it to play out. But if you got XYZ calls for $100 by July, it's a tough spot to be in. Even if the stock is deep in the money, right? You just never know. Whether, like, does Robinhood deserve to be at 49? Of course not, dude. I mean, like, earnings were insane. They put up $1 billion of revenue. They don't deserve to be at this level, but technically they're below 40 billion market. I mean, they have $5 billion in cash, so their enterprise value is $37 billion, growing 100%. Like, it's just with the probably guiding for 45% growth in Q1 based on the January data. But it is what it is, right? Like, the price will reflect the level of excitement that the street had, and it'll also reflect the level of downward pressure. So I don't want to be in Robinhood calls for June, even though I think by June it probably should be closer to that $60, $70 level. It is what it is. Also, if someone's deep in covered calls, I know a lot of you guys have covered calls on Palantir. There's a whole underground Palantir covered call bear society of people that are like sad when Palantir goes down, but they're actually very happy because their covered calls are not in jeopardy anymore. I'm sure a lot of you guys, have the ability to potentially close out some of those covered calls, or at least pay a much less of a debit to get out of those covered calls. So there are a lot of bright sides to some of the weakness that we're seeing. I think the biggest bright side is maybe it just lowers people's expectations to be a bit more reasonable. I mean, Coinbase, bro, look at Coinbase. This thing was almost 300 last Wednesday. Now it's 228, even after they beat EPS by $3. Like, does it deserve to be here? No, but the market's not giving them any narrative built momentum, especially because Bitcoin's been pretty flat. What is really interesting about this market, though, is like, where's the IPOs, right? If you're Stripe, are you IPOing? If you're Discord, are you IPOing? If you're Klarna, are you IPOing? If you're Anduril, are you IPOing? I mean, like, now that we actually have some volatility to the downside, are there going to be companies that come out and actually decide it's time to go public? And is there going to be liquidity for them to go public? I think we're going to have to see that over the coming months as well. Erwin says, if Rocket Lab gaps down, I'm selling my truck and buying shares with the cash. See, this is the other thing. If you have real conviction on these names, like Erwin does on Rocket Lab, and you really get a dip that's like a stupid dip in your opinion, that could be one of the best opportunities to set up your financial future over the next 10. Like if HUD goes back to 30 or something insane, yeah, I'm going to figure out what I need to sell to get more HUD, right? So these opportunities can be really fantastic, but they could also be painful in the short term. And I just think we all have to be ready to deal with it. The market is telling you that NVIDIA will miss tomorrow. Well, NVIDIA reports on Wednesday, but yeah, the market's definitely not being excited about NVIDIA's earnings. I also do think, though, the market is being the market. And I don't think this has anything to do with NVIDIA. I think the market's just following the Friday action that they saw. Let me pull up some macro charts. I didn't get to show yet. Here's a couple of charts that I think are important, kind of indicating what's happening in the broader market. So here's an interesting chart. This one I think is very interesting. So post-election years, which we're in right now, 2025, the bottom of February technically is the best time to buy. So this is an aggregated chart from 1900 to 2020 on where the stock market goes up and down during a post-election year. So 2017 is factored into this list. 2025 is, or well, not 2025, but all the years below 2020. So 2009 is factored into this year. 2013 is factored into this chart. And as you can see, February is the bottom, or the end of February tends to be the bottom. Early March, and that tends to be the best time to buy. Early August tends to be the top during post-election years. And then by December, you actually end out about 15% higher on post-election years on an aggregated reading of the S&P 500. So this is historically actually matching up with what's supposed to happen. We're supposed to get some really bad pain at the bottom of February on a post-election year. I don't know why that happens. That's just how the market operates. And we're actually seeing some of that pain right now. This is really hopium. It's definitely hopium, but hopefully it's also providing people a little bit of context of the historical trajectory on post-election years. Here's a chart of NVIDIA. So NVIDIA's forward PE is 30. This is heading into, or not their forward PE, their actual PE is at 30 right now. So this is the lowest NVIDIA earnings heading into, or lowest PE of NVIDIA's earnings heading into their Q4 results. So NVIDIA also is a bit down right now as well, but it's one of the lowest levels that we're seeing on NVIDIA. The source for that chart was from SeasonX. SeasonX is a research firm that puts together a lot of this data. Now, here's another chart that I thought was really interesting. Year-to-date inflows across different asset classes. So money market funds are taking the cake with about $220 billion of flows. And then you see everything else kind of pales in comparison to money market funds. Government bonds are at $5 billion. Bank loans are around $5 billion. Fixed income is around $100 billion. Obviously, ETFs have done very well. Equities have put up about $110 billion. But money market funds, aka cash, collecting that juicy 4% on the side, that is what's gotten the most amount of flows. And I guess this dip is potentially going to be a dip that takes some of that money off the sidelines or attracts more money onto the sidelines. Palantir right here, 91, getting a little bit of a bounce. Robin at 48.65. Bitcoin getting close to going below 94,000. Very close. BABA's down 9%. S&P is down a third. NVIDIA 132. HIMS is down 5%. A little recovery from HIMS. It was down 10%. So not too bad on HIMS. Grab down 3%. That was down about 5%. So that's recovering a little bit. Meta 667. Tesla 328, down 3%. And then Uber down 4%. So Uber and Tesla both moving red on the day as well. What's the total loss for Derek? I don't even want to ask, dude. Derek's it was 90 million a couple of days ago. It's probably done a little bit more. But again, it's just different scales, right? Like his portfolio is obviously much bigger, so the scale of losses are going to be bigger, and same thing for everyone else. Nonetheless, it's a nasty day. A little bit of a nasty day. Let's get a little bit more coverage on Buffett, and then we'll keep going from there.
In terms of the preferred dividend, yeah, no doubt about it. I always go back to one of his better analogies, which is, he's a hitter in baseball, and there's no called strikes. There's no penalty he views for just letting them go by and not taking a swing, and that's what he's been doing.
Thanks, Mike.
Okay.
All right. Let's keep the eye on Apple if we can. Of course, talking about Berkshire there, which had been the largest, well, certainly still is, very large holder. The tech giant is planning to open an AI server factory in Texas. This is part of the announcement, at least, of a massive investment in the U.S. Deirdre Bosa joins us. She's in San Francisco. Has more for us on exactly what's behind this plan. Deirdre.
Hey, good morning, David. So let me give you a few more details. Investment of $500 billion over the next 4 years, pledging 20,000 jobs. And that comes less than a week after Tim Cook met with President Trump. Now, Trump was quick to front run the announcement at a press conference last week on Friday, saying that Apple was going to build here instead because they don't want to pay the tariffs. So really drawing a line there. And again, today on Truth Social, the president posting the reason, faith in what we are doing, without which they wouldn't be investing 10 cents, which is where it certainly becomes a little muddy. Apple has long been touting investment here in the United States. Here's a press release from 2021 during the Biden administration, where Apple pledges $430 million in U.S. investments over 5 years and exactly 20,000 jobs. And then back in 2018, similar commitment for $350 billion, raising the question, how much of the latest announcement is new? How much is it a repackaging of previous commitments? UBS pours some cold water on the idea of this being new, writing in a note this morning. While the headline figure on the surface is a large number, we believe it lacks substance at this juncture based on history. It also points out that Apple's infrastructure strategy is very different than that of the hyperscalers. Apple spends a lot less. It estimates $10 billion versus roughly $200 billion for Meta, Microsoft, and Amazon and Google in 2024. And that, in turn, has to do with Apple's AI strategy, which has always been very light on infrastructure and focuses on-device AI or edge AI, leveraging its own silicon and leveraging the large language models that others like OpenAI have built. Now, all of this, guys, would seem to suggest that the announcement this morning is more political than groundbreaking and really a continuation of the Apple playbook from that first Trump administration. Let the president take credit to avoid tariffs on key parts of the business.
I agree. I don't think Apple cares about investing in the United States. I think they care about not getting tariffs. And $500 billion was what they had to pay, and that's what they ended up paying. Bitcoin below 94. There she goes. This is another reason I'm not really that excited to buy the Hood dip. Hood makes a lot of money off crypto. Crypto slows down. Hood slows down as well. I think it's something we got to be honest about. So that's the other factor on Hood right here. I mean, if crypto really gets a beating back into the 80s, yeah, all the crypto proxies are going to get it. I mean, I don't even want to look at MicroStrategy right now. Where are they at? MSTR is down 6%, baby. Below the 300s. Below the 300s. 281. There's this group on Twitter called Irresponsibly Long MicroStrategy, and there's people that just swear by that stock. I mean, you think Palantir is a cult. Dude, at least MicroStrategy is like a different type of call. There are people that are down millions and millions of dollars on that stock, and they do not care. They are convicted in the mission. So the net asset value, the premium to NAV on MicroStrategy has collapsed from about 3 to 1.8. I think now it's closer to 1.4. So obviously that premium continues to shrink, and if it goes below 1, MSTR stock is not going to be in a good position right now. But that one is getting hit right here. 281.4. The Bitcoin miners, Riot is down 5%. CleanSpark is down 5%. Marathon is down 6%. What are some of the other proxies? Coinbase is down 3.75%. Iran is down 7%. Yeah, all the miners. Palantir back below 90 as well. Really having a tough time holding above 90. But all the proxies are getting hit bad. Admit you're not a Bitcoin exposure. Not really, dude. It's just Hood. It's like Hood is my crypto. I know a lot of you guys don't think Hood is crypto exposure, but to me, Hood is the best crypto exposure because it's a real business that was also able to benefit off of the catalyst of crypto. But yeah, I don't have any other exposure besides that. Now, granted, if we get Bitcoin into the 80s, I wouldn't hate selling puts on IBIT at that point. Like, I think around that 70 to 80, hopefully, is like a decent level of support for Bitcoin if we actually get there. I think it would take a lot for Bitcoin to get there. I don't think it's going to be that easy. There's too many people that are in the narrative, too many institutionalized funds and asset classes that are now starting to adopt Bitcoin. So I don't think it easily gets back there. Tom Lead is calling for it to go to 60 before it goes to 250. So, I mean, there is a world where we definitely see it lower, but yeah, my main exposure is through Hood. I mean, Nubank's holding up well. Well, Nubank should be holding up well. It got decimated on Friday. So Nubank up 5%. That seems like a healthy little rebound that we're seeing. Why is Baba down? I actually don't know. Baba said they're going to be investing into AI data centers. I don't know why that's bearish. That was the headline this morning. I think people are taking profits like they should because it's up 70% for the year. I mean, you had Steve basically say he's taking profits here as well. So I think it's more profit taking. I don't think there's a headline there, but there might be some headline that's causing a little bit of pain. Baba just ran up way too fast. Yeah, I mean, look, Baba was dead for 3 years, so it was worth the run. But I mean, there's a lot of people that I know that are in Baba outside of Steve on Twitter on Friday. And they're like, dude, I'm selling. I'm finally getting out of this thing. They got averages in the 80s and 90s, and they're using this as a way to get out. Baba's still cheap at these levels, but is the China risk officially gone? I don't know. But at least that's what the market was thinking when they took them up to 145 last week. AMD down 2%. Oklo, this one was almost 60. This one's basically down 50%. Why? Because there's no earnings and no one knows how much nuclear energy is actually needed for data centers. This one, look, look, if you own Oklo, I feel bad about it, but I'm happy to see these types of names go down. Like Oklo did not deserve to be trading at freaking a $10 billion market cap. Like, this is just natural. Like, some of these names had to come down. This was ridiculous. Where's Fartcoin? Fartcoin's got to be down bad today. Fartcoin, wow, still holding on to 30 cents somehow. Fartcoin down 6%. It's holding on to 30 cents. Where's the Trump coin? Trump coin is down 7%. Trump coin's now at $14.87. It was at 70 at one point. So it's getting hit. China's down as well. Yeah, all of China's down. NEO's down. FXI, you got all of China taking a hit. MicroStrategy still down 6%. Bitcoin 94,000. Nvidia 131. Nvidia getting close to the 130s. I don't know, dude. I have 500 shares. I'm not going to sell those shares. I hope I don't sound stupid for not selling those shares going into earnings, but we got those shares at a discount. It's just we're going to see if we get a deeper discount. Dude, the problem with NVIDIA earnings is if they tank the bed, no one's going to believe in this whole AI CapEx narrative anymore, right? It's just going to go down the drain. Everyone's going to feel this is Cisco in 2000. I think the odds on that are 10%. The higher odds are 90% that they crush earnings and that they calm investors in regards to where AI is going. But if there's a world where that narrative sinks in, I mean, you're just going to be having NVIDIA trading much below the 120s, and you're going to have a lot of bag holders like myself holding this stock. I think fundamentally NVIDIA's demand is sound and it's not going away, at least for the next 18 months, and it's in a good position. But then again, I could be wrong. The cool thing about being wrong in NVIDIA is everyone's going to be wrong. Like, if I'm wrong, I mean, Wall Street was wrong. So it's one of those things where you kind of can't blame yourself on this one, but it would be pretty sad to see that scenario play out. Jensen went to the White House to discuss a script a few weeks ago. Trump told him to pump guidance. Well, here's the other thing, dude. How bad does the market get before Trump comes in and says, hey, we got to pump this thing up? I mean, there might be a world where Trump wants the market to take a nasty hit because then he'll be seen as the savior who brings the market back to life. I think I wouldn't put it beneath Trump to be having that mentality either. But how bad does he let the market take a hit before he tries to get things to get back into rotation or into movement? I don't know. I guess we're going to find out. Nike's up 5%. Yeah, we're getting a rotation into some level of safety here. It's funny that they're going to Nike, though. Out of all places, Nike. Arnie says Trump needs the AI narrative to continue to boost GDP. Good expectation for the future. That's a really good point, dude. Here's the other thing. Like, if we don't have growth via AI, the U.S. economy is screwed, bro. Like we're 36 trillion in debt. Even if Elon cuts $1 trillion of expenses, that's not enough to deal with all of our debt. We need growth, and we need growth badly. And if we don't get growth, Palantir here at 90, and it doesn't come from AI, I don't know where the growth's going to come from. It's not coming from crypto. I mean, it's not going to come from marginal productivity gains. Like, we need a massive productivity shift to boost GDP. We need AI. So part of the bear case, I guess, on the broader market is that if you don't believe AI is the next S curve of growth for the U.S. economy, where is growth coming from across the entire world? Like, I don't know. And if we don't get growth, I don't even want to imagine what happens to the economy. So to me, it's like it's NVIDIA. NVIDIA's never had a more important earnings than Wednesday, and the broader AI landscape being in check, I think, is really important for this economy to hold up. Because if not, I don't know how this plays out. Unless we're just not going to get that type of growth, right? Like, maybe we'll get marginal growth, but we're not going to get like astronomical levels of growth. And then I think the only way to resolve the debt is to cut as much as we can, but the political will to cut is not there. So then what do? We end up printing even more. And then maybe Bitcoin is the winner. Maybe Bitcoin is the answer. If we can't cut our debt, we can't grow out of our debt. Maybe we hyperinflate our currencies and then Bitcoin's the only thing left. The problem is Bitcoin only works with global liquidity levels being higher. And Bitcoin, quite frankly, trades with the NASDAQ. It trades with growth. It trades with risk on assets. And in that world, it just described, risk on gets destroyed. So it can get really messy, dude, if NVIDIA doesn't put up good numbers. And so we're going to need to see on Wednesday what happens. But my broader assumptions are that NVIDIA is going to be fine. I mean, like, Blackwell's going to do $9 billion in revenue. It's like, again, is guidance going to suck or not? And if it doesn't suck, which from all the checks and all the sell side reports I've read on NVIDIA, guidance should be phenomenal, and NVIDIA should have another big year of growth. If it's not, I guess we're gonna have to see. Also, let me play this clip right here. So Steve Cohen, who's the hedge fund manager at Point72, he doesn't usually get that bearish. And recently he started getting a little bearish. And some people have actually reached out to me because when he gets bearish, historically, you've seen a little bit of weakness. Now, granted, there's a lot of variables to consider, but here's his take on Doge and kind of what's going on with the broader economy right now.
Speak at the FII Institute conference I attended last week as well.
Do you have film? Do you want to toss it or something?
Yeah, we have it. He was somewhat negative, at least on the kind of on the broader economic picture.
Billionaire-itis.
Maybe he does, although the Mets are going to have a great season. But take a listen.
In addition, now you have Doge, right? And you know, wherever you lay on the Doge issue, I mean, that's austerity, and austerity. You know, when that money's been coursing through the economy over many years, and now potentially will be reduced or stopped in many ways, has got to be negative for the economy.
Well,
if it's Theranos,
pretty straightforward, simple thought, but makes sense, right?
Well, yeah, but so far it's small potatoes, but it's USAID.
It depends. Well, we've got a piece up on our website that it could be the largest layoff in U.S. history. And it would filter down to all kinds of local economies because of the multiplier.
Not to mention, right? I mean, you cut a $5 million grant that's part of NIH to, you know, study whatever you want, right? You're talking about a lot of different PhDs that were part of that. It has that.
Well, you think it's a switch over to quantum computing? See, a quantum computer, the Maryland professor who actually knows quantum.
I did. Well, you're talking about Microsoft last week.
Yeah,
with their announcement.
Did you see his comment, this professor, which I absolutely love? This is where you cross over from the realm of science to advertising, Jay Salt.
I have no idea what's happening with quantum. We'll find out what happens with that over the coming weeks. Also, we'll find out what happens with what's his name, with Jensen when he has the quantum conference with the big CEOs that join him. But the broader point is Cohen is getting a bit more bearish. And as someone said in the chat right there, Cohen, Buffett, Griffin, you got a lot of these big guys that are expressing a little bit of doubt. Dalio's been bearish for a while. Now, granted, to kind of push back against this, all of those guys were kind of bearish over the past couple of years. And, or I shouldn't say bearish, but definitely not really bullish. And if they were the only one who was really bullish was Druckenmiller. And he's done phenomenally well in 23, 2024. But the rest of those guys, I imagine they would probably want to be more bullish than they were over the past couple of years, and they just weren't. So, I mean, we're going to have to see if their skepticism makes any sense right here. We got some analysis from JP Morgan on 13Fs that came out. Here is what JP Morgan said from all the 13Ds and 13Fs that came out. The gap between mega cap tech's institutional weighting and its S&P 500 weighting widened in fourth quarter of 2024. So here are the three key observations that they brought from the 13F data. Apple is now the most under-owned large cap tech stock as we track fourth quarter 2024, with the gap between Apple's S&P 500 weighting and institutional ownership widening by 38 bips. Second, the gap between Amazon's institutional ownership and S&P 500 weighting widened more than any other large cap tech stock by 66 bips, leaving Amazon under-owned at 1.2%. Lastly, NVIDIA remains the third most under-owned large cap tech stock as of fourth quarter 2024, with a gap between NVIDIA's institutional ownership and S&P 500's weightings by 46 bips, with under ownership now at 1.86% versus 1.4%. So Apple, Amazon, and NVIDIA were the most sold names in Q4 2024 as per 13Fs, and they're the most under-owned names out of the Max 7, which means Google, Microsoft, Tesla, and Meta actually have a lot more exposure with professional money managers than Amazon, NVIDIA, and Apple. For Amazon, I think it makes sense because Amazon's operating margins are good, not great. And so people probably want to take profits. I think that's fair. Apple, it makes a lot of sense. Apple, my opinion on Apple has been pretty consistent. I think it's overvalued. I think it'll keep going up because it's the market. Apple is the market, but I don't know anyone who gets excited to own Apple. And then NVIDIA is the surprising one. It actually tends to be a little bearish going into earnings, that people took profits on NVIDIA in Q4 versus continued to accumulate, which means the question becomes, who was buying NVIDIA in Q4 more than the hedge funds? And I guess we'll find out after these earnings. Obviously, retail probably could have been a net buyer. You could have had pension funds buying more versus just professional money managers. I mean, there's a lot of different variations on how this plays out, but earnings is going to give us more of the details that we're looking for on Wednesday. Druckenmiller did sell Palantir and NVIDIA. That's correct. I mean, he sold NVIDIA at 90, and he did share some regrets about selling NVIDIA at 90. But he also sold Palantir, I think, at 45. He bought back in at 20. He actually sold it at $8. So he sold the bottom, then he bought back in at 21, then he sold at 40. But he was sort of upset that he got rid of his NVIDIA at 90. But then again, he bought it at like 150. So he made a decent number of money. Buybacks. Well, that's a good point. We are entering buyback season. And because of the decline in equities, I mean, NVIDIA has $50 billion they can use to buy back their stock. Apple, Meta, et cetera, they can all buy back their stock a lot cheaper. Even Hood, dude. Hood bought 5 million shares at 29. And they bought another 5 million shares at 19. They still have $700 million left to buy the dip. So if we get some stupid pricing on Hood back into the low 40s, I would imagine they would buy that dip as well. I don't know. Like in terms of like a full-on crash, like 2022 type of year, I am just not convinced we are there. Microsoft back above 400 and Palantir back above 91. I am not convinced we are in 2022 at all, because what hurt 2022, the precursor to that, was 2021 earnings were horrible. And you had rates going up. I don't think rates are going to go up, even if they're not going down. And I definitely don't think earnings growth was bad. So those are two simple parts of the syllogism that I put together to make me feel it doesn't have to be a 2024 type of year, but it definitely doesn't have to be a 2022 type of year. Now, granted, Q1 guidance will be important, or Q1 execution, because we already got good guidance for Q1, will be important in May, but it doesn't feel as aggressive as 2022 felt. Druckenmiller's my fave. Dude's a straight up killer. Yeah. He also bought Argentina at the lows. He bought the Argentinian ETFs, and then Malay came and magnified everything as well. Is Hims having earnings today? Yes, Hims is having earnings today after the bell. And so I'll be live to cover Hims. We have a bunch of companies actually having earnings today. So I'll be live to cover all of them. Let's get a more of an update on RBC and what they were saying about the consumer. And then we'll keep going from there.
the stock sell-off would.
Yeah, and look, I will
suggest.
say the conference board, CEO confidence survey came out last week, and I had been reading week to week and sort of seen uncertainty overtake optimism. And I was actually surprised when that conference board data point came out as strong as it did. So it told me optimism has been dented on the corporate side, but not derailed. At the same time, though, with all these negative consumer data points coming out, I would really feel a lot better if some of these consumer companies would come out and say, in a more pointed fashion, things haven't changed. We're still seeing what we've been seeing. And again, it just feels a little light, like they're rushing through the conversation, and we're not getting a lot of details. And I've done this job long enough to know sometimes it's what you're not hearing that's most important.
Okay. Sometimes the good news, bad news does play. It does work out for us. And I could really see if we had continuing questions about consumer confidence in the economy. If the Fed's back in the game, I could see the market rallying, even though it really is because the economy, but they're so addicted to traders, to the notion of, oh God, if QE came back, or if there's not QT, or if we were going back to 3 or 4 rate cuts instead of questioning whether there will be any. I could see the market actually, in the face of some weakness in the economy, I could still see it doing well.
And look, I think to your point too, the 10-year yield, right, has been moving a little bit lower in here, and we stopped sort of seeing this escalation. I think that was a pressure point on the market when we were making that run to 5% on the 10-year yields. Now we're at like 4.4 today.
Yeah.
That's good as well. But I will tell you, Joe, the last year and a half, the hedge funds all seem to want to play this game on the Fed, where they're constantly dialing up and dialing down expectations, and that's jerking around the stock market.
Well, if you can all work it out with math. If you're at 21 times earnings, and let's say earnings aren't quite up as much as they don't go up 15%, they go up 12%. If you could count on the multiple staying at 21 or going to, maybe even going up because rates come down, then the market could be sort of treading water. I mean, are you expecting the market up this year?
So we've got 6,600, which is not up a ton from here, but up a little bit. It's a better number now, right? Than
you think we get a pullback in the meantime at 10%?
Our 6,600 bakes in the idea that we're going to get a 5 to 10% drawdown, and so that would that would take you to like 5,500, 5,800 somewhere in there. That's very normal in this post-COVID environment, this post-2022 environment. If you really start to see economic growth expectations questioned and pulled down in a big way, that could result in something more like a 15 to 20% drawdown, and then our target's not going to work. We're going to have to revisit that. That's not in my base case right now. It's a risky monitor. It's a tail risk. But I will tell you, Joe, on Friday, I was pleasantly surprised that the GDP consensus for 2020 for 2025 had actually moved up to 2.3%. So it's still inching up, despite all this noise and all these concerns.
So you got the 10-year down below 4.4. Look at that. The market's not really interpreting that as bullish, but you got bondholders buying up these bonds, trying to secure these yields. That 10-year gets below 4, things get really exciting. I mean, that's definitely less competition for equities if bonds get bought up. The question becomes, why are they getting bought up? Is the street thinking there's a recession coming, or is the street just buying them up because they think it's offering an attractive yield at this point? One argument could be the street thinks that we're going to get rate cuts because something in the economy is breaking, therefore they want to lock in their yield right now. Again, we're just going to need a lot more macro data to kind of determine if that takes place. Now, the Michigan consumer stuff on Friday was not pretty. PMI was not pretty. Retail sales also was not the prettiest. You do have some level of macro data to make the argument for why things are going to get dicey. I think it comes down to earnings growth and inflation expectations. And I still think inflation's propped up with shelter, which is going to come down. Now, when it comes down to earnings expectations, we're going to have to see Q1, right? Q4 was good. Q1 has to live up to it. And then I think we'll have a better gauge of understanding what's going on. Alibaba getting decimated, down 10%. I don't really know why it's down 10%. I guess people are taking profits there. I don't know why it deserved to get hit that bad. SMCI down 5%. Someone brought up a good comment in the chat, which is that if SMCI doesn't pull up the 10K, is that bad for NVIDIA? And I kind of think the answer is yes, right? Like if SMCI doesn't release their 10K, SMCI is one of the top 3 suppliers for NVIDIA GPUs for the servers. Like that's not good, right? It's definitely not bullish for NVIDIA if one of your top suppliers is not able to properly be audited in the public markets. So yeah, I think that's bad for NVIDIA. I wouldn't say that's like I wouldn't say that wouldn't have any impact on the perception of NVIDIA. That wouldn't be good. So, I mean, if you hold NVIDIA, I guess, yeah, you definitely want SMCI to disclose the damn 10K that they're waiting till 11:59 p.m., I guess. You know, I submitted a college essay once at literally 11:59. I mean, dude, it was a 6-page essay. I started writing it at 9:15 p.m. I remember this day like it was yesterday. It was over Christmas break. It was actually on Christmas Eve. I had to submit it. And at 9:15, I started typing. And then I took a break. And then it was like 11:30. I was like, oh, I should finish this up. And you talk about, you know, being verbose. You know, just like writing to write and then finding new words to say different things. And then I submitted. And I felt really proud of myself. I think I got like 85 on that essay. But like, that's what SMCI is doing, bro. They're waiting till the very last minute to put out some very important numbers that SMCI is a $30 billion company. This isn't a class in college. This is like a lot of money is on the line here. And it's just weird. It's just weird why they're waiting so long. That was not 20 years ago. That was, what did I do? This was 2019. This is senior year of college. I don't even remember what class it was. Dude, what class was this? It was some dumb class, dude. It was a class that didn't matter. It was one of those classes you had to finish just to get the degree. Dude, guess who got a C in public speaking? In public speaking, guess who got a C? I think it was a C minus. Me. I got a C minus in public freaking speaking my senior year. Now you might be asking why, given, well, I basically publicly speak for a living. It's because I missed some assignments, bro. I just didn't hand them in on time. Like, that's like, it was hilarious, bro. Like, I was like, I got a C minus in public speak. Like, that's crazy, bro. I just stopped caring about college senior. Now, granted, it was also COVID, and like it was just so much stuff going on. Like the grades were like just not important towards the end of the year. So, but it was funny to see one of my final grades in college was a C minus, and like, you know, I would tend to say I'm not horrible at public speaking, but then again, there you go. If you could only learn to pronounce simple words, that's correct. If you could only learn. Wait, do I still have the poll set up on West Wing? I can't believe you guys let me lose to Steve on this, bro. I was so confident you guys would have my back. Yeah, out of 2,000 votes, 77% of you said West Wing is good, not great. Cannot believe you guys did that to me, bro. I thought I would be welcomed back after a 2-day break. You guys would embrace me with open arms. And what do? You give Steve the win. First of all, Palantir's already down. Steve got that win for the day. And then he gets the West Wing win. I really think West Wing, like it's a dude, it's 8.9 out of 10 on IMDb. How could anyone say that's not a phenomenal, great show? I don't get it. I watched it 10 years ago. And the fact that I remembered 10 years ago some of the characters, the fact that it stuck with me for the past decade and I wanted to watch it again, that means something. And you guys are saying it's not even a good show. Unbelievable, dude. Unfreaking believable. Palantir 92.16. We're back above 92, up from 89. A little bit of a green candle. Robinhood as well, trying to get back to 49 at 48.90. The West Wing is 2 shows written by Sorkin and after he left. Well, he I think he left after season 4, right? Well, the first 4 seasons are amazing, if I recall. I watched one episode last night. Like, I legit watched it. I actually wasn't on my phone during the episode. I was watching the show. I was like, huh, this got my, you never know. Dawson's Creek, West Wing, the random shows can keep my attention. But then Game of Thrones will put me to sleep, bro. I can't deal with all that medieval stuff. It's too much. It's no Jersey Shore. Yes, exactly. It is not Jersey Shore. All right, what else do we got? Coinbase down 3%. We're getting a very little bounce, nothing crazy. Rock Lab, instead of 2172, it's at 2212. S&P, instead of down 0.5, it's down 0.25. Nebus still getting hit, down 11%. Goog's at 182. Grab, where's Grabby Grab? Grab's at 475, that's down 3%. Nvidia 132, Apple going green, and then Palantir down 9% instead of down 11%. There you go. There you go. Look, I don't think this is something to panic about. I don't think this is the setup for 2022. I could obviously be wrong. I just think we have enough earnings growth and macro headwinds to keep pulling further. But we're going to see, dude. NVIDIA earnings is going to be a really big telltale on where the hell semiconductor stocks are going, data center stocks are going, all that stuff. And then we enter into March. Again, that one chart that I showed earlier today, this is the time where on a post-election year, you tend to see weakness. It's kind of happening exactly like it would happen at the bottom of February, early March. Also, here's another thing for why the next couple months could be a little tough. People got to pay their taxes, bro. I did my taxes over the weekend. I tried to ask myself, hey, is me going to IHOP and then asking myself about stocks a business meeting with myself? Maybe I can write that off. So I had those conversations over the weekend trying to figure out my tax expenses. But I'm going to be paying the most taxes I ever paid in history, in at least in my personal life ever. So guess what? I'm going to be selling some stocks to pay those taxes. So I think April can definitely get a little painful along with March, because people are probably going to try to, people are probably taking profits right now, knowing that, if you don't know if these stocks are going to stay at these levels in March, you might be taking profits right now just to secure your tax funds. And so I think next couple months could be a little choppy. It could absolutely be choppy, especially and uniquely, this argument makes sense because in 2024, everyone had such a good year. So, you kind of have to, even if you have some long-term gains, right? Like if you took any trades in 2024 that you probably did well off, you got to pay taxes on short-term gains. So yeah, there's going to need to be some selling definitely to pay taxes. Bsov says, I blame Amit. This all started because he slept through the market close on Friday. Dude, I think I woke up very briefly at like 3:30 on Friday, like 30 minutes before 4 p.m. I saw the market and I was basically half dead and I just went back to sleep. And then I woke up back at 7:30 and I really saw the portfolio. I was like, oh wow, it was a nasty day. And I was still so sick. I couldn't even conceptualize what was happening, but it was nasty. Friday's market close would have been nasty too, because it would have just been tons of pain that everyone was feeling. Robinhood hit 47.97 at 11:05. Wow. So we hit a new low right below 48 at 11:05. We got some more low. Oh yeah, Matt streamed. Were you guys watching Matt? I forgot. Matt streamed on Friday, so at least you had someone able to help deal with all the pain. But yeah, look, it is what it is. It is what it is. I just don't think anyone can be super upset over this market reaction, given how much we went. Look, dude, if you got into Hood in the beginning of the year or Palantir in the beginning of the year, you're still doing great. Same with a lot of these names, dude. If you got into Meta early in the year, you're still doing phenomenal. And then if you got into these names mid 2024, if you got into Rocket Lab at $10, you just can't be that upset. You can be annoyed, but I don't think you can be upset. And so we would need a pretty more dramatic decline across the market for, I think, people to really be aggravated. Because right now people are annoyed. People aren't aggravated. But we get another 10, 15% down. Yeah, I think people will be much more than annoyed at that point. And I guess we're going to have to find out how this plays out later in the week. Nubank holding up on the green, and then Apple holding up on the green as well. Yeah, this is the word, humbling. Yeah, for everybody, dude. For everybody. 2024 was great. 2025 was amazing until Friday. And now the market humbles. The market takes away what it gives. But the other thing is the market also gives back over the long term. And so unless you're in some really bad short-term trades or call options or whatever, it's one of those things where you try to find more money that you can get to allocate to these positions. And over the long term, you're not that stressed out about it as people that are in short-term trades. All right, cool. That is it for today. Let's do word of the day. We'll get out of here, and then we'll be back at 3:45 like usual on the market close. Does Rocket Lab have earnings today? No, that's Thursday, right? Rocket Lab's on Thursday. Okay, cool. So Rocket Lab's tomorrow or Thursday. So HIMS is today. HIMS is the important one today. Word of the day is knitted.
Knitted. Knitted.
Bright or lustrous? I've never heard this word before. The knitted wings of the dragonfly shimmered as it hovered over the pond. The car's freshly waxed hood looked knitted under the streetlights. See, it sounds like someone's like knitting you, like, you know, like they knitted a scarf. It reminds me of Scarlett. If she's watching, shout out to Scarlett. But yeah, our portfolios are not knitted today. They are not knitted today. All right, that's it. I'll be back 3:45. I'll try to get some more updates on what's going on in the market. Today, after the bell, we do have some important earnings. We've got Hims, we've got Riot, we've got Zoom, and we have Tempest. That'll be an important one. Tempest. Okay, cool. So we got a bunch of different companies we'll be taking a look at. Hopefully we see a little bit of relief in this market. If not, then we will see how bad things get. And then we'll keep going from there. All right. Thank you, everybody. Appreciate it. Happy to be back and be back in motion and action when it comes to covering the markets. I will see you guys on Market Close. Bye, everyone. Have a good one. See you guys in a bit.